Imagine living your dream life, spending Bitcoin without ever losing Bitcoin. That's not a fantasy anymore.
It's an interesting time in Bitcoin's life. I've been in the crypto space since 2013.
Jason Leibowitz, an ex-Credit Suisse banker turned Bitcoiner, has built the world's first Bitcoin-denominated life insurance company.
I was the co-founder of Credit Suisse's global blockchain team. The bank took a very firm stance of blockchain good, Bitcoin bad.
Where your Bitcoin grows, protects your family, and can be borrowed against tax-free. It's infinite banking on the Bitcoin standard.
As a low-cost basis Bitcoiner, everything in Bitcoin life insurance is tax-free.
63,000 hours of experience later, yes, 63,000 hours, we do the math in the episode, he's showing us how to live forever on a fraction of a Bitcoin.
You're going to have to sell less and less and less and less Bitcoin, meaning you might never run out of Bitcoin.
This is how you never run out of Bitcoin and how you outsmart the system forever. Mr. Jason Leibowitz, thank you so much for joining me here today. We have a discussion offline about what you guys are doing with Meanwhile and the taking over the insurance industry, this massive market, trillions and trillions and trillions of dollars that are up for grabs in the legacy world. And as you noted, people have been waiting for the life insurance industry to kind of come on to the Bitcoin life raft. And we've seen some things here and there over the last number of years. But what you guys are doing at Meanwhile is very fascinating.
Yeah, no, great to be here. Thanks for having me. It's an interesting time in Bitcoin's life. I've been in the crypto space since 2013. It's been a long roller coaster ride. I think I bought my first Bitcoin in October 2013. So it's like 13 years ago, just about 12, 13 years ago. And yeah, I've seen a lot of cycles. When I first got in, I was on Wall Street, traditional Wall Street, in fixed income sales and trading. And I discovered Bitcoin and I became absolutely fascinated. I started acquiring Bitcoin around $200 on Coinbase. I realized the importance of not your keys, not your coins, that the invention of Bitcoin was the ability to self-custody a digital asset for the first time ever, and that you couldn't like copy and paste the codes and double spend. And so I got a wallet. I knew to get my coins off exchange. And so I got a BitGo wallet, but it was a web wallet. And I just started tooling and playing and buying Bitcoin and Coinbase and sending it to BitGo. And then, watch Bitcoin go to 1,200 and then crash back to 300. And then Mt. Gox imploded. And then the Silk Road was shut down. The U.S. Marshal Service seized the Silk Road coins and were auctioning them off, basically laundering the money, like giving a stamp of legitimacy to these like illicitly used coins. And now they're at the U.S. Marshal Service, and now we're going to auction them off to KYC bidders, which was an interesting stamp of approval from the government that these Bitcoin things are legitimate for the first time ever. And I left traditional Wall Street and I started a crypto fund in New York that actively managed a portfolio of digital currencies. This was 2014. Yeah, you trading those markets, it was very interesting. Raising capital was tough. Every person we would talk to that was smart, markets focused, financially and tech savvy, they still started conversations in 2014 with, can you explain Bitcoin once and for all? And it's tough to raise money, but we did. But ultimately, I went on to join Credit Suisse, the global Swiss bank that is no longer with us. But at the time, all the big banks of the world were building out blockchain teams. They thought that blockchain was an interesting technology, that it could help reduce costs and save time and create automation at the bank. And our blockchain team, I was the co-founder of Credit Suisse's global blockchain team. We sat next to AI, machine learning, robotics, big data, public cloud. We were blockchain, just another innovation technology piece in the innovation portfolio. But the bank took a very firm stance of blockchain good, Bitcoin bad. So we were really working with disintermediation, automation, and reducing settlement times for the legacy capital markets asset classes that the bank was involved in. So we built out all these different blockchain, really, they call them distributed ledger technology initiatives. And this was 2016, 17, 18, 19. I was with the bank for 4 years from 2016 to 2020, but it got very interesting in 2017. If you recall, Bitcoin started the year at $1,000, ended the year at $20,000. But then subsequently, the ICO bubble popped and the market crashed in 2018-19 back to $3,000, $4,000, $5,000. And I'm talking in Bitcoin terms. And it was an interesting time because whether you liked it or not, whether you were a Bitcoin bull or you thought it was rat poison, you couldn't help but see it everywhere. The Journal was covering it. The FT was covering it. It was on Bloomberg. We were at a bank, so everyone was talking about it. It was a new asset class. Who knew? But people were trying to figure it out. But one thing happened that was really interesting, and that's being a global bank, a global Swiss bank, where you had very high net worth clients and family offices around the world that had lots of assets invested at the bank. They started to reach out to their private bankers saying, we're seeing this Bitcoin thing, this crypto thing. I think we should probably explore an allocation. I have 25 million. These are the types of calls they'd have. I have 25 million in assets with you. I'd like to explore what coins should we buy, in what weights, and what ratios. Who are the best counterparties? How do you do your due diligence on counterparties? How do you lower your cost profile and make sure that you're, being smart about the fees you're going to be paying for transactions? And then once you acquire crypto, what do you do with it? Custody, self-custody, third-party custody. Is there insurance against theft and hacking? What happens if you pass away? Where do the assets go? How do you deal with taxes? How do you handle your estate? These are all questions that we started to field. Well, they would first go to the private bankers who, as you can imagine, 2018, these private bankers in the private Swiss bank had no idea how to answer those questions. Crypto is a new asset. And so these were VIP clients. They didn't want to say no to, like, we don't touch Bitcoin. Instead, they said, you know what? We have a blockchain team in New York. Why don't you speak to Jason? And so in 2018 and 2019, I got so many conference calls set up where these types of clients would be asking me these questions, viewing me as like the professional, and I did know the answers to all the questions, and I would walk them through it. I loved it. I was happy to talk to these people about Bitcoin and just getting long and how to do it, and best counterparties based on their jurisdiction, best custodians. I knew all the answers given my pedigree and background and passion for the space. But very quickly after the first several calls, I was told in no uncertain terms by higher ups at the bank that we do not give out Bitcoin investment advice. That don't forget, Bitcoin bad, blockchain good at this bank. We're going to follow the Jamie Dimon approach, where we're not going to help anyone buy crypto. God forbid they should, lose money or have a bad counterparty and then sue us. No, no, no. We are not in the space yet. That being said, we don't want to tell these people to get lost. And these are important clients of the bank. So you can take these calls, but don't give them the answers they need. Just beat around the bush about blockchain and how great Credit Suisse is with regards to our approach to the technology and all that stuff. Fine. But I got dozens and dozens and dozens of these calls over the 2 years, 2018, 2019. And I realized that there was an opportunity that these people had questions. They needed help. They needed handholding from a professional that they could trust, where there was accountability, not a grandkid who was tech savvy, where if he accidentally told grandpa to wire money to the wrong exchange and it was lost, the worst that could happen is, nothing. He's your grandson. So they needed professional accountability. And so Credit Suisse wasn't giving it to them. No bank was giving it to them. No financial advisors in 2018-19 were giving it to them. So I left Credit Suisse January 2020 to start my own company that helped high net worth individuals and family offices allocate from traditional capital markets asset classes into the crypto space safely and securely. Depending on their jurisdiction and what they wanted, I'd help them set up an exchange or a prime brokerage relationship with a liquidity provider. I'd help them set up either self-custody or third-party custody, and just help doing God's work, getting people orange pilled and long and into the crypto space.
Generational wealth doesn't happen by accident. Bitcoin fixed the money, but it didn't fix the system of protecting and passing it on. Bitcoiners, we have to live in two different worlds, idealism versus pragmatism. That's where Meanwhile comes in. It's the world's first Bitcoin-denominated life insurance company, regulated in Bermuda and built entirely by Bitcoiners for Bitcoiners. With Meanwhile, long-term holders can grow and protect their Bitcoin wealth through tax-free policy loans, no repayment obligation, no margin call risk, while making inheritance simple and secure and entirely in Bitcoin. It's about sovereignty, stewardship, and building a legacy that lasts centuries. Because if Bitcoin is forever, your plan should be too. Learn more and sign up with code 4QPBWC at meanwhile.bm. That's meanwhile.bm, code 4QPBWC, or just sign up in the link in the description below. All right, real talk for a second. We all know health insurance is basically the fiat system of healthcare. The biggest debauchery there is. It's expensive, confusing. Somehow you still end up paying hundreds of dollars for a Band-Aid. We moved to crowd sharing almost 5 years ago. It's the best decision we ever made. Instead of sending your money to the insurance company's black hole, you join a like-minded community that directly funds each other's medical bills. Simple, transparent, way cheaper, and that difference you save, you can invest in Bitcoin. It's an amazing win-win. And look, we're part of the Bitcoin community because we believe in freedom, decentralization. Crowd Health brings that same mindset to healthcare. You choose your doctor, you pay in cash, and the community's got your back when the big bills hit. No networks, no middlemen, no bureaucrats trying to approve your care, just people helping people the way it should be. You make decisions about your health. That's as sovereign as it gets. So if you're ready to take the orange pill for your health, this open enrollment, go to Join Crowd Health to get started for $99 for your first 3 months using code Brandon at joincrowdhealth.com. That's joincrowdhealth.com, code Brandon. Crowd Health is not insurance. Opt out. Take your power back. This is how we win. If you haven't been living under a rock recently, you've seen that the world is completely changing. Seizures, freezing of assets, bail-ins, bailouts, everything and everyone are coming after your money, your time and energy, because the system is collapsing in and of itself. That's why Foundation created the Passport Core. Bitcoin revolution is 2 words: self-custody. Custodying your assets in your mind. This generates the private key to store your wealth forever. This is the revolution. Foundation is built on sovereignty, freedom, and privacy. Go to foundation.xyz/Brandon for $10 off your Passport Core. This beautiful, sleek foundation wallet is everything you need. The ergonomics, the feel, the weight are absolutely incredible. It also comes with the free Envoy app. You can buy Bitcoin straight into self-custody, label and track your coins, send secure air-gap transactions in seconds, beginner-friendly, but also powerful enough for the pros. Foundation is built for sovereignty, so you can take back control of your money in your digital life. Get started today, again, at foundation.xyz/Brandon for $10 off your Passport Core.
This was January 2020, right before the COVID lockdown. So as you can probably recall, you start this new business and then suddenly the world's about to end. But luckily for me, I guess, or for the crypto, community, the pandemic response, the economic response, sorry, to the pandemic was hugely bullish for all risk assets. Just printing money and giving people stimmy checks and PPP loans. And I mean, obviously, Bitcoin absolutely ripped. Tesla started buying, MicroStrategy started buying. It became the thing to own and talk about and buy. And so the markets were good. And these people, these baby boomers mostly that I was helping getting involved, getting long, who were taking this gamble to get long this Wild West cryptocurrency, they got immediate gratification for the most part, where they would buy today and it would be up 5% tomorrow. That's how good this market was in 2020 and 2021. And so that helped my company grow and expand, and ultimately, things were good. Obviously, the end of 2022 and 2023 was a dark time for crypto, as trust was just destroyed with who the best institutions were. But luckily, all my clients were self-custody throughout. Most of them wanted self-custody to begin with, so they understood the invention of crypto, of Bitcoin. And the ones that weren't, I helped them get into self-custody towards the latter half of 2022. So they didn't have any exposure to any of the bankruptcies, and no one was getting yield from any of these fraudulent companies that were promising yield that they couldn't deliver on. And so obviously FTX was like the straw that broke the camel's back, but that was also the bottom. Actually, I would say, Brandon, I'm curious your take. The darkest moment for me ever in my crypto history was actually in 2023, in like the spring of 2023, during Operation Choke Point 2.5, we'll say, when Silvergate Bank, Signature Bank, and Silicon Valley Bank were all shut down in the same week to try to unbank the crypto industry in the US. Because while, Mt. Gox was a tough time, and, the ICO bubble popping 2018 was tough, and especially FTX and Three Arrows and Genesis was tough, Gemini, with all the exposure in BlockFi. These were all like dark moments, but the worst of them was Operation Choke Point, because people had this, me and all my clients, like, we had this asset called Bitcoin for the most part that was only worth what someone else was willing to pay for it. But if you couldn't monetize it, if you can't sell it, then what good is it? And the only way you could sell it at any exchange or broker in the US was basically through one of those 3 banks, Silvergate, Signature, Silicon Valley. And with all of them gone, then suddenly oh my God, I can't sell my asset. What is it worth? It was a really scary moment. I don't know what your scariest moment was, and I'll give you a second to think about it. But what's amazing to me is that only a few months later, BlackRock came in and saved the day, where they filed for an ETF, a spot ETF for the first time ever, kind of out of nowhere. I think it was May of 2023, like 2 or 3 months, not even later, after Operation Choke Point. And the bottom was in at that point. And here we are, 2024 was all the ETFs went live and Trump was elected, and now we're in this bull market. And I discovered meanwhile last year while I was at another crypto fund. And when I realized the concept of Bitcoin denominated whole life insurance, my head kind of exploded because I didn't really understand life insurance much. I mean, I'm a low cost basis Bitcoin investor. I do have a wife and two young kids. I had term life insurance only because it was cheap. Whole life to me made no sense. It's very
Yeah.
expensive, and you only get like 4% guaranteed growth rate. Like, no, I'd rather buy term and invest the difference in Bitcoin.
Yep. Yep.
And so, Bitcoin nominated whole life insurance, like, what does that do for me? Well, as a low cost basis Bitcoiner, everything in Bitcoin life insurance is tax free. So I'll never pay taxes on my Bitcoin again. Amazing. And I have to take care of my family, and I have Bitcoin in self custody. And God forbid I get hit by a bus crossing the street tomorrow. Does my wife know how to open my self custody wallets? Not definitely, not 100%.
Hmm.
I don't know.
Yep.
Listen, she's been with me a long time. She knows crypto. She has her own wallet, but she's never opened it without me next to her. She's never opened my wallet before.
Yep.
So this protects my family with a guaranteed payout in life insurance. Like, all she needs to do is file a claim with the life insurance company. God forbid I pass unexpectedly with a policy, and she'll get more Bitcoin than I ever even paid into the policy. That's how life insurance works. So it solved a lot of problems for me. And in January of this year, in February, well, January this year, I reached out to the Meanwhile team saying, guys, I've been in the crypto space for a long time, for 12 years, and I've never seen a product as unbelievable, as problem solving, and as elegant as Bitcoin life insurance. And I asked the CEO point blank, I'm like, how do you not have 50,000 clients already? Like, this is the most unbelievable product. And he kind of shrugged his shoulders, was like, why don't you come join the team? We'll make up a title for you. We'll call it Head of Business Development. You help us get there. You help us expand partnerships and strategy and distribution and sales, and off to the races. And since then, we raised a 40 million Series A in April, and we just a couple weeks ago closed an $82 million funding round, our next funding round, from Apollo and Bain and Northwestern Mutual, Pantera and On Ventures, and a bunch of others. And so we've raised a lot of money. We're a Bermuda-based life insurance company, and we're fully on the Bitcoin standard. So it's been an amazing ride, and my career has seen lots of ups and downs through all these different cycles in crypto. But I feel wholeheartedly that I'm attached to the right rocket ship right now, and that Bitcoin life insurance is one of those brilliant, brilliant products that everyone wishes they thought of. And my founders, they thought of it first, and we're the only Bitcoin life insurance company on the planet right now. And we have a huge head start, and we've gotten a lot of positive reaction.
I have a bunch of questions just off of that, and I think I don't even know how to get into all of them, so I'm going to try to start knocking them down one at a time here. Where is the balance between, you and I talked about this offline a little bit about, self custody being the revolution of Bitcoin, and really this system at some point riding on a Bitcoin standard, and the beauty of self custody is that you can custody your assets. You're not tied to third parties, middlemen. So how do you guys how do you strike that balance of these two worlds, and having people have custody or in some way, shape, or fashion, and also driving that revolution forward of this truly new system, not faster payments and all this other BS in the altcoin world of, like, we don't need faster
Hmm.
things, we need secure, decentralized things that can't
Yeah.
be rug pulled from you, right? So how do you marry these two, or how does Meanwhile do that?
Yeah. No, excellent question. And it's such an important topic of discussion. And I would say this: no matter what you decide to do with your Bitcoin, there's a risk. If you self custody it and you lose your private keys or passwords or whatever,
Mhm.
then you're out of luck, and that sucks. Now, we're all used to self-custody to a degree because cash, paper cash, fiat in our wallets,
Hmm.
self-custody.
Yep.
And you lose it, you pull your wallet out to get a hot dog on the street, and you drop that bill down a
Yep.
sewer drain, you're never getting it back. But it's okay because you're not carrying your life savings in your wallet. You're not carrying $100,000 in your wallet.
Hmm.
It's like, some bills. And so we're used to it. If you lose it, it's gone. It's a bearer instrument. And so Bitcoin being the first ever asset technology where the real core invention is just the ability to self-custody a digital asset, the ability to be your own bank, the ability to have something that's potentially worth a lot of money that is a digital bearer instrument that no one else controls, that you're not asking anyone for permission, that can censor your access to move your assets. And so it's an important, important point. But being a Bitcoin maximalist myself, having been in the space for a long time, believing in self-custody, it was when I had kids that I started to question the risk reward of my philosophy, to just reanalyze everything. Because now here we are in 2025, end of 2025, where Bitcoin's over $100,000. And this asset that I've been highly convicted is going to go up over our lifetimes has gone up a lot, and it's worth a ton of money, and life-changing money. And at what point do I have to be really considerate and careful where if I lose it, it's gone and my family is impacted in a huge way? If I pass away, get hit by a bus, and my wife, and I don't have a contingency plan, or she doesn't know how to use crypto wallets and doesn't know the private key, the whole thing. Basically, I have to leave a treasure map of where are the safes and combinations, safety deposit box and keys, the private keys, how to use them, the Google authenticators, the
Hmm.
multi-factor authentication or MPC, depending on what you're using. The new email addresses. I have a ton of email addresses that no one's ever, heard of, that she probably doesn't even know about, for access to my accounts, how to get them, how to use the codes, all of these things. It's a treasure map on paper, like handwritten, because I don't want it printed. It's a digital record with my private
Yep.
keys. And if that gets lost, or she doesn't know how to use it, or I pass and she opens it and then spills water on it and it's gone, like these types of little things that you like
Hmm.
think are mundane, and suddenly millions of dollars or whatever it might be worth is gone. And we have two little kids, and kids are expensive, as you know. That's not okay. It's a tragedy. And it's really like, I don't care what your philosophy is. If you care about your family and their well-being and their ability to have financial comfort over the course of their lives, if you're gone, then it's not okay to put your, self-custody, um, be your own bank philosophy before your family, in my opinion. And so we had to weigh that to have life insurance. And I was happy to give up custody of some of my assets to Meanwhile, and we custody in Anchorage. And if you know Anchorage Digital, or any of your listeners don't know Anchorage Digital, well, I would say that they're a top two custodian on the planet for digital assets. They're a New York registered, regulated, licensed, federally recognized trust company. That means that they're bankruptcy remote. All their crypto assets in custody are bankruptcy remote, meaning they're insulated from any type of bankruptcy should Anchorage have any problems in the future. They're a cybersecurity company. They're as buttoned up and tight as it comes. They're incredibly lean and run really well. Super impressive. And just as most people have custody in the US at Coinbase, you should feel just as comfortable having custody at Anchorage, in my opinion. And so I'm very happy to give my Bitcoin in the form of premium, and I'm going to get into how a life insurance policy at Meanwhile works. But you pay your premiums in Bitcoin, and it goes to a segregated account at controlled by Meanwhile at Anchorage in your name. That's where your premium payments go. And as long as you're okay with giving up Bitcoin out of self custody into that framework, then you get a lot of benefit. And I know that my family is going to be protected and taken care of if some tragedy happens to me, where that protection, even though I'm giving Bitcoin up to a life insurance company and a third party custodian, is totally worth it in my opinion.
What are your thoughts? Because again, I know I can hear people right now because again, a lot of the demographic of this show, a lot of it, 9 out of 10 are men. They're generally between ages 35 and 65. So this is the demographic of people that are very interested in stuff like this, thinking about it, probably have kids, et cetera, gaining real wealth, or already have a lot of wealth in Bitcoin, and things like being in New York, I talked to you about my buddy, I think that is in insurance, and him and I have been going back and forth for years. And I was like, well, how do you trust your insurance company? Like, what if your insurance company rug pulls? He's like, well, they're guaranteed to, it's a contract. They have a contract. And I was like, well, contract's only as good as the paper is written on, as we've seen in the last few decades. So I would love for you to speak on how you think about, because you mentioned something there. I was just a question I was going to ask you. You mentioned something about, hey, I'm good giving some of my Bitcoin to this policy. And so I think what's important is it's not all of your Bitcoin, right? You have your self custody. You've got, hey, I've got a policy. So I'd love for you to explain how you think about the risk mitigation, risk diversification. Hey, someone might say, hey, it's in New York. Like, New York's always trying to come after people like us. So, I'm trying to think of like the adversarial thinking of like worst case scenario type of stuff. In saying that, how do you look at your risk buckets, your, just the risk allocation, or the diversifying your assets and things like that? Like, how does Jason think of that? How does Meanwhile think of that, of, how to segregate those things into buckets? You are truly maximizing benefits, but also mitigating risk.
Yeah, no, absolutely. So the way our policy works is it's called a 10 pay. Now, what that means is you're going to be paying your premiums over 10 years in equal annual installments. So if you want, you keep 9/10ths of your premium to yourself, and you only pay 1/10 a year, 1/10 at a time each year. So when you have your Bitcoin in self custody, you choose your own premium when it comes to Meanwhile, and you decide how much that you're going to send into your account. Now, your death benefit or face amount is guaranteed and fixed from day one. So let's paint an example. 35-year-old healthy male, 10 Bitcoin in premium pays about 18 in death benefit. You pay the 10 Bitcoin premium over 10 years. So your first year premium is 1 Bitcoin. Second year is 1 Bitcoin. Third year is 1 Bitcoin. All the way to the end of a decade, you've paid 10 Bitcoin in. The entire time, no matter what, your face amount is 18. It doesn't vary. It doesn't change. There's no pro rata based on how much you paid into that point. So if you pay your first your premium in, and days later, like tragedy happens and you're gone, the full 18 pays out to your beneficiaries. So you get to keep 9/10 of your Bitcoin that you choose in your premium in self custody or wherever you want in terms of trust. What you then get, the way it works is after the 10 Bitcoin are paid, you're done for life. You now get all these other benefits. And I think the best way to explain how policy loans work and the yield and the inheritance piece is the fact that we are fully on the Bitcoin standard. And when Meanwhile is on the Bitcoin standard, where our entire life insurance company is denominated in Bitcoin, it means a few things. It means A, we never sell Bitcoin. B, there's never a realization event. There's no dollarization. We don't index to the dollar. Everything we do is in Bitcoin. In fact, if you go to our website, you'll see that our audited financials are public, and they're a table of numbers with B's in front of each number. Assets and liabilities with B's in front of each number instead of dollar signs, because everything we do is measured in Bitcoin. And so at any point, you can cancel your policy and get your premiums back. If you get spooked, if you, whatever it might be, it's not it's not like a place where you send in Bitcoin and it's never coming back to you and it only goes to your family if you die. You can cancel a policy and you can get your money back. We have what's called a surrender value enhancement rider. It allows you to get the greater of either the surrender value of your policy or your premiums back, whatever you want, whenever you want, at any point in time. And so you're not stuck. And by the way, you're not going from Bitcoin to dollars and you're not causing any type of taxable event. So the fact that it is very similar to custody, to third-party custody, in the sense that when you set up an account in Meanwhile, We create a segregated vault for you in your name at Anchorage. Meanwhile controls it. You don't have private keys like third-party custody, but your Bitcoin goes there. Your premiums go there. And if you want in the future, you cancel your policy, your premiums come back to you. If you set up a custody account, you send your Bitcoin for custody, no one's selling it. And in the future, you want to move to another custody account, or you want it back in self-custody, you just redeem and the Bitcoin gets moved back to you. So it's similar in that capacity. So from a risk perspective, people ask, A, what's my risk? Well, your risk is technically to Meanwhile, the life insurance company, and Anchorage, the custodian. If you want it in self-custody, what's your risk? Your risk is your ability to safeguard your private keys. Now, I think that the thing a lot of us Bitcoiners have in common is that we want to hold our Bitcoin for as long as possible without selling. Maybe one day you hand it down to your children or to any beneficiaries or charity or whatever that you want in the future. But how do you guarantee for decades and generations that your Bitcoin in self-custody will not be stolen or lost or whatever? Let me give an example. That big fire in the Pacific Palisades in California, there are anecdotes of people that had ledgers in their safes in their house. And the safes are almost always fireproof. That's how they're sold. You buy a safe, it's generally sold as a fireproof safe. Well, none of them were fireproof, or at least the heat tolerance was not built to
or the
the
time.
threshold of
Yeah.
the intensity of that heat in that fire and during that, conflagration. And so a lot of people lost their ledgers and their private keys. They just didn't really know how to back up private keys. And so everything was in a safe. And when it burnt to a crisp and it was turned to rubble, their Bitcoin was gone permanently forever. That might have been Bitcoin. These might have been very wealthy people, as a wealthy enclave in LA, where they never needed to sell their Bitcoin. They had enough cash or cash flow or salary or whatever. And they wanted to maybe hand their Bitcoin to their children one day. Who knows? Well, it's gone permanently, as is 15 to 20% of all Bitcoin ever mined. That's the estimation, right? And so how do you preserve Bitcoin for generations to come? There's no easy answer. And I think that a balance to that equation, or a factor of that equation, is life insurance at the best custodian that you can find, which is Coinbase or Anchorage. We have accounts at both. We prefer Anchorage for the time being, but we're very open to working closer with Coinbase if they're listening. Let's figure out a way to make it work. But I think that's an important balance, an important distinction. So this is like having custody, except you get a lot more benefits.
Now that you have your hardware wallet, the key that it generated needs to be stored in something forever that can withstand fire, flood, nuclear fallout, checks, hockey pucks. This is your 12-word C plate, your 24-word C plate. After a lot of people asking for your 12-word C plate, here it is, stampseed.com, code Brandon for 15% off. After everything that's going on in the world, fires we've seen in the Pacific Palisades, what we've seen happen in Hawaii, everything gone. Titanium seed plates withstands everything. Your posterity will thank you. It only takes a few minutes. Don't let these little things, these small investments scare you from the most important aspects of Bitcoin and the first money we have ever conceived here on earth. Stampseed.com, code Brandon for 15% off. Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. One of our other sponsors is Stampseed. So I'm going to get a hold of James. You're making me think of earlier the treasure map. Stampseed needs to have like a big titanium plate so someone can put their treasure map on there. I mean, it's funny, but it's not. So what do you think about like you guys were saying that you're denominated, in Bitcoin? Do you guys have a Bitcoin treasury at Meanwhile? Is that do you guys raise some money and then put some in Bitcoin and then use the rest for operations? Like how does that work? I guess just real quickly.
Spot on. We are a holdco opco structure. Holding company is where we raise our capital and have expenses, so it's Bitcoin and fiat, payroll and everything else. And then the operating company under it doesn't have a bank account. It's only Bitcoin. We don't need a bank account. You pay your premiums in Bitcoin, your death benefits paid out in Bitcoin, the policy loans are made in Bitcoin. Everything being in Bitcoin, what that means is that you never really need to think about any type of fiat conversion. And in fact, if you really get into the, macro element of what that means, there's no volatility. People think of Bitcoin as this highly volatile asset. But when you think in Bitcoin, when you operate in Bitcoin, well, then one Bitcoin equals one Bitcoin. It doesn't matter that it dropped to $105,000 today and it was 120,000 a couple weeks ago. That's irrelevant to us. One Bitcoin equals one Bitcoin. Your premium payments will always be the same over a decade. Your death benefit will always be the same, no matter what the dollar price of Bitcoin is. So I think it's a good time to explain exactly how our product works, to really understand what it means to think in Bitcoin and to be on the Bitcoin standard as a life insurance company, because it's where we differ from every other company in our industry.
Mm-hmm.
So let's say you want a life insurance policy. Well, with traditional life insurance and fiat, you generally go to a life insurer and you ask for coverage. You say, I'd like $1 million policy, a whole life policy on my life. They'll say, great. We'll crunch some numbers based on your age, your health, your sex, whether you're a smoker or not. And they'll dictate to you an amount of premium that you have to pay either each month or each year in fiat. And there's obviously going to be fees and expenses baked into those premium payments because you're told what to pay. But in whole life, those premium payments go into a mutual fund that has a guaranteed growth rate of 4 to 5%, depends. And what's great about whole life is everything is tax-free. The investment in the mutual fund account, it grows tax-free. You're able in the future to get policy loans from it, tax-free. And when you do pass away and there's a payout, a claim, that's tax-free as well. So with the mutual fund element, with the investment account, it's growing let's say 4% a year every year. And in the future, let's say 2 decades down the road, it's up 30%. Well, you can use your life insurance policy as like a bank account. You can get a policy loan from it. And the way it works is generally you can borrow up to 90% of the surrender value of your policy. So it's like a 90% LTV loan. And that cash that you borrow, you never have to repay. And so, for example, that 30% appreciated mutual fund, you want to borrow 100K. If you're within the threshold, you borrow $100,000 out of it. You never have to repay it because your new death benefit nets against the loan. So you had $1 million death benefit, you borrowed 100K. Now your new death benefit's $900,000. You're generally going to pay an interest rate on that loan of like 5 or 6%, which can also get taken out of the death benefit. And so you now have 100,000 cash, do whatever you want with it. You never have to repay it. Pretty cool. Well, in the Bitcoin standard, things had to be worked around a little bit because of the one major difference being that Bitcoin is a scarce asset with finite supply, whereas fiat is virtually unlimited supply. And so in Bitcoin life insurance, you can't come to Meanwhile and ask for coverage and have us tell you how much Bitcoin and premium to pay. Why? Because we don't know how much Bitcoin each person has. We can't tell you have to pay 10 Bitcoin in premium over 10 years because you might say, what are you talking about? I only have 5 Bitcoin. So instead, we had to flip the thing upside down. You come to us with an amount of Bitcoin you know you have that you want to use as premium. The premium is always going to be paid over 10 years. It's called a 10 pay. It's a non-participating or non-mutual policy, meaning that there's no dividends, there's no cash flow in Bitcoin. And you pay that premium in equal annual installments over a decade, then you're done for life. It's a limited pay or a 10 pay. So you come to us with the amount of Bitcoin that you have. And you say, what do I get with this? Well, we'll then crunch numbers based on your age, health, sex, and smoking status, and we'll give you a death benefit ratio in Bitcoin that you get relative to the amount of Bitcoin premium that you want to use. So for a 35-year-old healthy non-smoking male who has 10 Bitcoin in premium, gets about 18 Bitcoin in death benefit. 1/8, 80% return on his 10 Bitcoin, or an 8 extra Bitcoin that you get over the course of your life that you probably wouldn't be able to get otherwise without buying 8 more Bitcoin. And so the question is then, how do you go from 10 to 18?
Yeah.
Well, we get 2% yield every year that we give to all of our policyholders. Just like the traditional life policy is growing at 4% a year, we chose 2%. Why? Because 2% is actually the minimum amount of yield that you need to generate in order to qualify as insurance. If we got 0% yield, for example, then there'd be no difference between us and a custodian. You give us 10 Bitcoin, you die, we give 10 Bitcoin to your family. No difference. So 2% is the minimum. We decided to elect for that minimum threshold because we believe it's conservative and sustainable, and we know that we can get that 2%. So where do we get the 2% from? Well, we work with low-cost basis Bitcoiners wherever they are in the world. As an example, a Bitcoin miner. It's just like a great example of the type of person that we work with to get yield where we're solving a problem of theirs. And the problem is low-cost basis Bitcoin and how to monetize it, minimizing the taxable event. Well, Bitcoin miners, they are generating Bitcoin pretty much every day, yet they have CapEx and OpEx needs. And those CapEx and OpEx needs are in dollars, in fiat. And so how do Bitcoin miners get fiat? Well, there's 2 ways. They can either borrow against their ASICs, against their machines, get loans, or they can sell Bitcoin. Obviously, selling Bitcoin is the easier option. The question is, how and when and how often and which Bitcoin of theirs are they selling? They're mining Bitcoin every day. Well, just like the rest of us, they have to pay capital gains tax. And they're taxed based on the difference between the day they mine the coin, that's their cost basis, wherever the market's trading at that day, that second,
Mhm.
and the price at which they sell the Bitcoin. Now, given Bitcoin's historic run from basically 0 in 2009 to 107,000 today when we're recording, obviously there's a lot of low-cost basis Bitcoin out there. Miners that have been around for a while, they might have Bitcoin that they mined at $100 or $1,000 or $20,000.
Mhm.
And because they have to pay taxes, capital gains tax, which is over 20%, it's not economic for them to sell their low-cost basis Bitcoin. They'd rather sell Bitcoin they mined today, yesterday, last week, last month, closer to the market price. So the question is, what do they do with the low-cost basis Bitcoin? The answer is nothing. I mean, they hold it. It makes no sense for them to have any sort of disposition or sale because they don't want to get that big tax hit. And so in essence, they're just holding Bitcoin like a Bitcoin treasury company, and they're doing nothing with it until Meanwhile rolled around. And we devised a way to free up miners or anyone with low-cost basis Bitcoin to free their low-cost basis Bitcoin up through the form of a 1-year repo or 1-year repurchase agreement, where they can swap low-cost basis Bitcoin for high-cost basis Bitcoin, which they can use as CapEx. So the way it works is a miner can come to us in this repo contract and lend us, as an example, 100 Bitcoin. That's low-cost basis. We'll lend them back 100 Bitcoin, and the Bitcoin we lend them back, because it takes the form of a repo, which is a loan, it assumes today's cost basis, which means they can immediately sell it for CapEx needs into fiat without any taxable event. We charge them 3.5% upfront. So mechanically, they lend us 100 Bitcoin, low cost basis. We lend them back 96.5 Bitcoin. That's the 3.5%, which they can immediately sell into dollars. They could do whatever they need to do with the dollars. And at the end of the year, they can either pay back the 96.5 Bitcoin and get their original low cost basis back, or they can roll to the next year by just paying another 3.5%, continuing the loan outstanding. And they can do that for up to 5 years. Now, what do we get out of that being Meanwhile? Well, we get 3.5% yield in Bitcoin terms, not dollar terms, but Bitcoin yield upfront with no counterparty or credit risk because it's a fully collateralized loan. If our counterparty disappears or goes bankrupt or anything happens, we have all 100 Bitcoin of theirs. They only have 96.5 of ours. So we're protected. Our policyholders are protected, and we give 2% of that 3.5% yield to our policyholders, and we keep 1.5% for ourselves. And this is how we figured out the best way to get yield. And what makes us unique is the fact that we're a life insurance company, that we have these long dated liabilities. We have 20-year-olds that have policies. They're not going to pass away for 70 years, perhaps. And so we're willing to take duration. We're duration seeking. We're willing to take long-term loans. And these loans, these one-year loans that can roll to 5 years, are perfect for us. We're conservative, we're risk averse, and we're taking no counterparty or credit risk. So that yield that we're getting, 3.5%, is not a lot. It's not 10% as some people are aiming for in the DeFi space, 20%, which is unsustainable and probably fake. But it's a sustainable yield that we can generate every year. We think there's thousands, tens of thousands of low-cost basis Bitcoin across just the miner community alone. And by the way, and this is a question we often get too, is, well, how sustainable is being able to get that yield every year into the future? Well, if the price of Bitcoin keeps going up, as I believe it will over time, and I'm sure you believe too, it'll go into the millions one day.
Yeah.
Well, then $100,000 Bitcoin, today's Bitcoin, is going to be low-cost basis one day.
Right.
And so it's a moving target where low-cost basis Bitcoin is this relative concept. The corporate tax gains rate, I think it's like 21 or so percent. So it's over 20%. And as long as it's not economic to sell Bitcoin within some certain percentage threshold, where you'd rather just do this type of repo and swap your low-cost basis for high basis for only 3.5%, where you're either a miner or maybe like a Bitcoin share class hedge fund, where you think you can outperform 3.5%, then this makes a lot of sense for you. So that's how we get yield. And every policyholder gets 2% yield. That's how, for the example I gave, how does 10 Bitcoin become 18? Well, 10, 10.2, 10.4, so on and so forth. You amortize that out for a 35-year-old. We amortize to age 100. So that's 65 years of 2% annual compounded growth rate in Bitcoin terms. And by the way, if the price of Bitcoin does continue to go up, then that 2% Bitcoin yield is amplified by orders of magnitude in dollar terms. So it's a pretty clever way to, without taking any counterparty or credit risk, generate yield and pass it on to all policyholders. And so it's one of the core benefits of the policy at Meanwhile.
Yeah, I guess the question in a way is how does someone not figure this out sooner? So really quick, you guys get the 3.5%, the policyholder gets 2%, and then the low cost, you get the difference.
1.5% for ourselves.
Exactly. Yeah, you keep that spread, the 1.5%, and then what the miner gets out of it is obviously the low cost basis. They get to sell right then. They get the fiat or whatever they need to go run their operations, whatever it is, and they can roll that over time. Yeah. I wanted to.
So they're going to get at the money, cost basis Bitcoin.
Yes.
And they can do whatever they want with that Bitcoin. Ideally, they're going to sell it that day for zero to minimal taxable event.
Right.
And use the fiat for whatever they need. And at the end of the year, they have the choice of repaying the loan or just roll into the next year and keeping the loan outstanding for just 3.5%. So pretty beneficial to anyone who's trying to step up their basis.
Okay, so I want to tangent over here for a second, and then we'll kind of come back to what we're saying. I would love you to kind of explain, because obviously in the general world of a Bitcoiner, obviously people have been seeing a lot over the last year or so of the Bitcoin treasury companies, exploding, but also lending options, right? We've got, you have MicroStrategy with their different stock offerings. You have Strike, Jack Muller's with their lending. You have the People's Reserve, CJ Constantinos with their home product lending. You've got Horizon, those guys, doing what they're doing with the home, so there's all kinds of different real estate, stock offering, things like that. I would love for you to try to, in maybe you can, maybe you can't, but if you could kind of, maybe like a wheel, or like how do you see all those things stack up in a way? Because, like a Strike, for instance, they're seemingly like the average person is kind of seeing like, oh, I can roll my loan. I can do stuff like that. So I'm trying to think of a way to ask you this question in the sense of like relating it or making it make sense for just the average person who's obviously been getting inundated with these things, with the strike lending, micro strategy, or again, strategy with their stretch offers, stretch offering, all these different
Yeah.
offerings they have. So, where do you guys see when you guys, because I guess maybe that's where I'm trying to go with this, was meanwhile, when you guys see all these products and these things being offered to these other people, how are you coming to position? And again, we've talked about this a little bit. How are you coming to position people and say, hey, this is why we are different. This is how we are different. I get you might be able to get 10% over here, 8%, or a strike loan is, hey, you're now paying 10% or 12%, to use this loan, then roll. So where do you guys kind of see yourself fitting with all these different offerings?
I think a lot of these offerings are dollar based to a degree, and a lot of them, like all these different derivatives and variations of strategy, for example, are allowing people to sell upside for downside protection.
Mm-hmm.
You're basically the strife and all these other
Yeah.
options from strategy. They're saying, all right, we get you don't like volatility, and we're a levered company that has a massive bet on Bitcoin. So we're willing to take some of your upside away from you. We'll keep the upside and we'll protect your downside, give you like a 10% or 20% band for your investment. So you have like more of a annuitized type of steady stream of income, so to speak, or returns, or mark to market at least, that you can at least create some sort of model and prediction, predicted cash flows around. And that's fine. But the one thing that they're all doing is they're indexing everything to the dollar. And in our case, we're not doing anything with the dollar. Everything stays in Bitcoin. And our whole company is founded on the premise that you're bullish Bitcoin, that you listen, to have a policy with us, you have to have Bitcoin, spot Bitcoin, not strategy stock,
Right.
not the
Yeah.
ETFs, not wrapped Bitcoin, but spot Bitcoin. And if you have spot Bitcoin and you want to have it for the long term, then it's either self-custody, third-party custody, or DeFi, wrapping it in DeFi and whatever, or you get a life insurance policy and you get 2% yield, you get to monetize it tax-free, and it pays out to your family tax-free. And by the way, your beneficiaries don't have to be tech or crypto savvy. They don't need to know how wallets work to get the Bitcoin payout. And I think that what we're bringing to the table from an industry perspective is starkly different than everything else out there. It kind of feels repetitive with the amount of Bitcoin treasury companies there are.
Mm-hmm.
I understand and I actually respect the strategy splits of, selling upside for principal or downside protection, that there are a lot of people that want that. But if you think in Bitcoin and you understand our product, there's no volatility, zero. All you have to do is have the mindset that you're long Bitcoin, that you're going to stay long Bitcoin, and that you're everything you're going to do is never going to be indexed to the dollar. And there'll never be a taxable event, and there'll never be a realization event. You have to be long Bitcoin and willing to be long Bitcoin for long term, and kind of have to want to pass on your Bitcoin to someone that you care about in the future. And if you don't have a family, it could be a charity. But you have to name a beneficiary in your policy. So I think actually the most interesting element of our product I haven't even gotten to yet, and that's how the policy loans work. And if you recall in the example of traditional life insurance that I gave earlier, that 4% growth rate, the mutual fund is up 30%. You borrow from it, you never have to repay, it just nets out of the death benefit. Well, it's the same concept with us, except you're borrowing Bitcoin. And the way to illustrate this example, which also helps differentiate us from all these other companies, is let's say Bitcoin goes to $1 million one day. Well, if you want some cash, you want to buy something, you want to take some chips off the table, you want to diversify, whatever it might be, if you want to get out of Bitcoin a little bit, well, then you have two options. If you have a policy with us, option one is sell Bitcoin at $1 million and pay a massive capital gains tax relative to your cost basis. Option two is get a policy loan, borrow out of your life insurance policy. This concept of infinite banking and Bitcoin life insurance. And how does that work? Well, you're borrowing Bitcoin, not dollars, for starters. So you log into your account, and meanwhile, you see your available loan amount is 90% of the surrender value. So it's like a 90% LTV loan. And you're going to borrow a number of Bitcoin up to 90% of the surrender value. You choose that amount. Let's say 2 Bitcoin is what you want, and it's within the 90% threshold. Well, you'll give us a wallet address that we will then screen and make sure it's not going to North Korea, and then send you 2 Bitcoin to that wallet because you're borrowing Bitcoin. You're not borrowing dollars. So at that point, meanwhile, it's pretty much done. You have 2 Bitcoin, but you want cash. What are you going to do with 2 Bitcoin? Well, you got to sell it now. So you go to an exchange or a broker that you have a relationship with, and you say, hey, I got 2 Bitcoin I want to sell. And they're going to say, okay, but where is this Bitcoin coming from? What's the cost basis? Well, you'll have a loan document, the term sheet, that says this comes from my regulated whole life insurance policy, meanwhile, regulated by the Bermuda Monetary Authority. And the cost basis was established on the day I originated the loan. In this case, $1 million a coin. You're getting a new stepped up cost basis. Well, you may have paid your premium with Bitcoin that you had bought many years ago at $100 or $1,000 or $100,000. Well, today Bitcoin's at $1 million. And when you borrow out of your policy, you're going to get new different Bitcoin from the insurance company at a new stepped up cost basis that's established on the day you originate the loan. You have 2 Bitcoin and $1 million a coin each cost basis. You take it to the exchange or broker that day. You sell at $1 million. Your cost basis therefore equals your sale price. No taxable event, no Form 1099. You keep all 2 million cash. Your new death benefit nets from 18 in that example to 16. And the interest rate on this loan is 3% in Bitcoin terms, which also gets netted out of that remaining death benefit. So you don't have to pay interest on a loan. You're not going to get invoiced every year. You can if you want, but you don't have to. You can let it accrue. And it just gets netted out one day against that remaining death benefit. So 18 becomes 16, then 3% on 2 Bitcoin each year in perpetuity until either you repay the loan or not. Comes out of the 16 as well. Don't forget, the rest of your policy is growing at 2%. So really it's a net 1% delta that you're paying. And so you now have 2 million cash that you could do whatever you want with, that you paid 0 taxes on. Pretty incredible concept of monetizing your Bitcoin in your life insurance policy without paying a dime in capital gains tax. And that's how all life insurance works. The US government and most governments of the Western world, they've created all these tax incentives in life insurance to try to get people to buy life insurance. Why? Because it protects them, it protects their families, it creates less dependency on the government, less welfare, less handouts. And so the levers in which they create these incentives are 0 tax. Assets in life insurance grow tax-free, the policy loans are tax-free, and when you do pass away and there's a claim, the assets go to whoever you want it to, beneficiaries, tax-free. So if you can afford it, they want you to buy it. And so to put life insurance and Bitcoin together, it's like peanut butter and jelly. It works so well because Bitcoin is this long-term asset that we all want to hold for as long as possible, sell as little as possible, pay as few taxes as possible. And this is how you do it. At least this is how we think the best way to do it. And then the final piece I'll just say, while I'm at it, is the life insurance component. The fact that there's an inheritance piece. The fact that when you do pass away, that whoever the insured is, when they're gone, there's a claim. The beneficiaries reach out to Meanwhile, saying this person died. Here's the death certificate. We're filing a claim. And we pay out Bitcoin or dollars. But really, because we operate in Bitcoin, we ask them, where do you want the Bitcoin? And if they say, and we understand that a lot of people might say, as an example, my spouse had the policy and this person was crypto savvy, tech savvy, understood all the nuances of crypto and self-custody and wallets and private keys. And now they're gone. And I don't want to see another Bitcoin for the rest of my life. I don't want Bitcoin. I want dollars. My needs are dollars. Well, then we'll help them liquidate that Bitcoin into dollars at Anchorage or wherever the Bitcoin is custodied at their trading desk, tax-free, because upon death, the Bitcoin receives a new cost basis. So we can liquidate it with their help, completely tax-free, and send them a wire if that's what they want. Or they want Bitcoin, we'll just send them the Bitcoin to whatever wallet they want. They can have an Anchorage vault. They can have their own self-custody. There could be 20 new grandkids. They want 1/20th for each grandkid in new wallets many years in the future. Bitcoin gets a new cost basis on that day. So end of the day, you get yield, you get tax-free policy loans, you get the seamless inheritance, and your family does not know how, your beneficiaries don't need to know how private keys and custody works. They just need to know that there's a policy at a life insurance company and they can get dollars if that's what they want.
Going back really quick, when we just talking about some of the numbers and some of the breakdown there, what the only, again, I can hear people asking, well, how does this not work or something like that? And you kind of, you explained it, but I would just like you to reiterate, I guess, that the only way is if you don't believe in Bitcoin long-term and you think it's going to, zero, in essence, like hey, I can't find any more low cost basis, miners or other people that bought in early to be able to have this work. Correct. I mean, that's the way that it would have to basically go back down to zero, or $10 or something to that effect, right? Where you couldn't find people in order to make that spread, and then they were going to loan their Bitcoin to you. Correct.
I think to rephrase the question, is our entire company dependent on the fact that we have to get 2% yield every year? The answer is a little bit. One of our requirements from the Bermuda Monetary Authority, our regulator, is that we have to maintain at least 150% capital reserve ratio, which means assets to liabilities have to be 150%. Currently, we're just around 400%. So if we can't find any yield, we're going to be paying 2% out of our reserve ratio. If we get below 150%, then there could be problems. But even if Bitcoin goes down in price, your payout is Bitcoin. 18 Bitcoin in this example is your payout regardless of what price Bitcoin's at. It could be $1, it could be $10 million, but you're getting 18 Bitcoin because everything's in Bitcoin. We don't care really what the dollar price is. We obviously hope it's going up. Our basis for the reason that our founders created this company and were able to raise so much money in the form of my CEO, he raised this company on the back of a memo that he wrote after he had an epiphany in the middle of the night in 2022. He wrote a memo. Zach Townsend is our CEO. He's plugged in Silicon Valley. He basically spread it around the Y Combinator community. And he got Sam Altman, Google, Northwestern Mutual, a bunch of other investors to seed the company for $22 million in 2022 on the basis of life insurance and Bitcoin are like two peas in a pod, as long as everything's in Bitcoin. And the whole point is that if you're long Bitcoin and you don't care about the price of Bitcoin as much because you believe it's going to go up, but you're willing to take Bitcoin where it's Bitcoin in premiums, Bitcoin out and death benefit, then what happens to the dollar, we all believe it's going to go up or bullish. But if everything stays in Bitcoin, then the company works. Because it pays in Bitcoin. Our currency is Bitcoin. So as long as Bitcoin can move on the blockchain, then our company can technically work. Whether it's $1 a coin or $1 million a coin or 20 million a coin, doesn't really matter. I mean, it matters from a investor's perspective and all that, but it doesn't matter from the mechanics and the operations of our life insurance company because Bitcoin's our currency. Does that make sense? So as long as Bitcoin can move on the blockchain, our company's going to exist.
Yeah, I think this brings up number one. Again, I can hear people, shrieking, Sam Altman is investing in your company. And it makes me shriek a little bit too. However, we have to separate things here, obviously. I think what's important, the question I have that years ago, I remember doing like a YouTube video on this and I got a lot of play. And it's something that, again, current events trump future trends. So sometimes, again, it's hard to talk about things in the future because people just don't care, right? We're humans, we live our daily life, and it's like, great, that's 10 years from now, 20 years from now, I'll deal with it then. And humans just historically are notorious for just, whatever, like that's in the future. That's a future problem. In saying that, what you just said, I think, is really important. It being denominated in Bitcoin, everything's denominated in Bitcoin. And this is what, in the video that I had done a few years ago that really got a lot of play, was what happens when the dollar doesn't exist. Because that's, a lot of these companies, to a degree, I feel like they're going to have some issues as things transition, like tomorrow or next week or next month. Like, what happened if everything just moved to a Bitcoin standard? It seems like from my angle, I mean, meanwhile, it's already operating in that space, so it would be a very simple transition. And since it is Bitcoin, it could be the worst people in the world theoretically investing in the company, but since it's Bitcoin and you're using custody and these different relationships and trying to disperse and mitigate some of that risk because of that you guys will have an easier time through this transition than a lot of companies that are just operating on fiat or fiat standards or trying to just kind of go back and forth all the time. So I don't know if that makes sense necessarily, but that to me, I think is really important to just kind of highlight that it is already a Bitcoin company and it's already set up for the future. It's a today thing and a tomorrow thing, which is really kind of hard to find, I think, in the world right now.
I'm trying to remember who coined the term think in Bitcoin. I think it was either Michael Saylor or Jack Mallers. But that's what you have to do with our
Mm-hmm.
company to become a policyholder. You really have to think in Bitcoin. And, once you start thinking in Bitcoin, you realize that there's no inflation. Everything is getting cheaper in Bitcoin terms.
Mm-hmm.
The price of a car used to be 1,000 Bitcoin. Now it's half a Bitcoin. And everything is getting less expensive. There's no inflation. There's nothing to worry about from an economic perspective. Obviously, this is a biased, bullish statement to think in Bitcoin and not worry about the future because Bitcoin is a foundational granite layer technology and store of value that I believe will be the underpinning of a lot of the future economy in decades to come. But yeah, we're building, like you said, I love it. We're building a tomorrow company today. And if you can access your Bitcoin tax free, you can monetize your Bitcoin tax free because there's a lot of time between tomorrow and today
Yep.
in the grand scheme of things, where we're still on the fiat standard and your rent, electricity, your groceries all going to be in dollars. And by the way, who wants to spend Bitcoin for anything? You want to keep your Bitcoin. So, Jack Mallers has a great approach to life where he lives in the Bitcoin standard. He pays
Mm-hmm.
everything on credit and credit card. And come the time on the 15th of every month when he has to, or 17th of every month when he has to pay his credit card bill, he sells the minimum amount of Bitcoin he needs to go into his checking account to pay off his credit card bill in full, and he keeps the rest in Bitcoin. And every month he does the same thing. And by the way, I do the same thing. And I know a lot of people that do the same thing because when you really understand that you only have to spend point one Bitcoin this month and 0.05 next month and 0.025 next month because everything in Bitcoin gets cheaper over time on average. That's how we operate. But our company is Bitcoin only, and we allow you to spend your Bitcoin tax free, hopefully less and less and less over time, so that way you can leave a legacy to your children. The one last stark difference between how we operate and how some of the Bitcoin maxis out there are living their life is like, look at Michael Saylor. I think he's single, no kids, and he's been quoted saying that he wants to die with a ton of Bitcoin that dies with him,
Mm-hmm.
like Satoshi did.
Yep.
And so he's like the opposite of someone we'd want to buy a policy. Listen, he doesn't want to leave his Bitcoin to anyone, so
Yep.
there'd be no beneficiary. But and you could think that's noble, or you could think that's batshit. But that's everyone has their own choice and their own. But he's thinking in Bitcoin.
Okay. Really, really quickly. Again, I know there's a lot of people watching that understand what you're saying in the sense of everything is getting cheaper in Bitcoin terms. But again, for the people that we do have a lot of people that, are just coming to Bitcoin, they're starting to really learn. Could you give, a 30-second, 60-second on why does Jason keep saying everything's going to keep getting cheaper in Bitcoin? Like, what do you mean it's 0.5 this month, they're my expenses, then it's, 0.3 and then it's, 0.2, 0.1, could you explain just, I know it's kind of hard to do in 30, 60 seconds, but just, give your best shot for the average person.
Yeah, I would say this. I would say you have to look at the compound annual growth rate of Bitcoin over the last year, 5 years, 10 years. I think it has a 50% compound annual growth rate over 5 years, meaning every year Bitcoin has an average return of 50%, which means that in dollar terms, everything gets cheaper by 50% year over year over year when you compare Bitcoin to dollars. So if your expenses remain in dollars and they remain relatively fixed, your rent is X or your mortgage is a 30-year mortgage, which is, $5,000 a month or whatever it might be, your car payments, um, kids' school, your groceries. It's all like a kind of a fixed number. Yeah, gas at the pump goes from $2 to $5 to $2 to $4, whatever, but it's within a range. If Bitcoin continues to appreciate by 50% a year every year, as it historically has, well, then the conversion from Bitcoin to dollars becomes, in Bitcoin notional terms, less and less and less and less. Because $50,000 is zero point 0.5 Bitcoin today, if that's all you need. Well, if Bitcoin goes up by 50% next year, then that zero point 0.5 Bitcoin number gets smaller the next year for the same amount of dollars. And then it gets smaller the next year after that for the same amount of dollars. And it gets smaller the next year after that for the same amount of dollars. And if you add to that a yield that you're growing your Bitcoin at, meanwhile it's 2% a year, well then you can be net positive for the rest of your life by growing your assets in Bitcoin denominated terms and converting them via policy loans and a meanwhile policy into dollars as needed. So that way you could pay off your dollar expenses, keep maximum amount of Bitcoin, and pay zero in taxes. So if like your audience really understands that component where you just apply a 50% compound annual growth rate to Bitcoin and your dollar expenses are whatever they are, well, you're going to have to sell less and less and less and less Bitcoin, meaning you might never run out of Bitcoin if you only have a 1 Bitcoin or 5 Bitcoin or whatever it might be. And so that's the goal, is to spend the minimum amount of Bitcoin you can. And over time, if you believe it's going to go up, then you should be able to sustain that lifestyle forever, especially if you're getting yield.
I love that line. That's so good. I'm making a note of this because that was a really good line. The last, like, you might never run out of Bitcoin. Just, again, we get so technical at times of how we explain things when you're down the rabbit hole, right? So it's thank you for putting it in terms that the average person can understand. And me, that I'm an average person. We're all average people, right? We're all normies, to some shape or fashion. So how do you keep people honest? I guess in the sense of, there's the rules, not rulers in Bitcoin. We've talked about the custody and just how the companies work. And then we talked about idealism versus pragmatism, and just this world where we do have to live in both worlds. I mean, we have to. I know I believe, I'm guessing you believe it. You've been in Bitcoin a long time. I believe that Bitcoin does change people. It's changed me. I know it's changed your life. It's changed my life. And so many people you see, it changes their life. So I do believe Bitcoin does change people. And so if we believe that and it stays decentralized and secure, then we have to have faith that the system will work. In saying that, we still do live in these two worlds where, because Bitcoin is getting more valuable, as you just explained, and it's getting more valuable and it's eating this fiat world just day in and day out. How does, maybe the best question first is, what does the lending look like? And this goes back to the future, and people have a really hard time wrapping their mind around deflation and just having deflation be distributed back to all of us and the gains of that, instead of this inflationary world where it's all robbed from us. So, again, goes right in kind of what you guys do as a company, but you're just spending a second or two on what does the future look like? Because I think a lot of people have this stigma, or like, well, we won't have lending. People won't spend their Bitcoin in the future if it keeps getting more valuable. Why would these companies give me back my Bitcoin? Because it's getting more and more valuable. It's a honeypot. And is there going to be lending in the future? Will things even exist? Because no one will want to lend their Bitcoin to someone else. So this whole thing that kind of is like, it's this opposite spiral upward instead of downward in a way. What do you say to
There's
people?
always a price.
Okay, yeah, I was going to say, like, I would love for you to explain this for a minute, of just like, the system is inverted. I mean, your company is inverting things. I mean, the system is literally being inverted on itself. So what does that future look like when the money keeps getting stronger? So how does that look in the future to you?
There's always a market clearing price for anything. There's a yield at which someone will lend Bitcoin, even if it's like the most precious asset on the planet at some point well into the future. So everyone wants yield paid in Bitcoin. I think that's the unlock here, in the fact that you get 2% a year Bitcoin denominated yield in a policy like ours. It's the key. If you can start with a nest egg, a nut of Bitcoin, and grow it at 2% every year and never have to worry about taxes, and you can live your lifestyle off that 2% yield, off those policy loans from like a policy, for example, then you're willing to spend that 2% yield, but you're never eating into your original principal. For example, you put 10 Bitcoin in premium, 18 death benefit. You could spend 8 Bitcoin over the course of your life before you even eat into the original 10 that you had.
Yeah.
That's like playing with house money, so to speak. Yep. And that 8 Bitcoin comes from the 2% yield. So you get this ability to, it's not credit. This is just life insurance based on yield, but you get this ability to spend more than you have based on the matching of a future generated return at the net present value. That's essentially how all life insurance companies operate. But the difference being that our product is that 18 Bitcoin is paid up front, guaranteed to your family. So it's not going to fluctuate. Your death benefit's not going to fluctuate with performance over time. Also, because the 2% yield is fixed and guaranteed every year into the future. So you get it makes a life insurance simple, easy to wrap your head around, and easy to project monetarily. And so that's to me the goal is spend your, like there's old Wall Street saying of spend your base salary and save your bonus. Get your base, like you want to like get to a base salary where that's your yearly spend, your monthly
Hmm.
cash flow. You're not spending more than your base, and your bonus is what you save. In Bitcoin, what I'm talking about is spend your yield, save your principal. If 10 Bitcoin is what you have now, you have a policy that grows 2% a year, just spend the 2%. If you can afford your lifestyle based off that plus your job, then you're well ahead of the game.
Yeah, yeah, absolutely. Do you coming back to what we were talking about a minute ago? What is your thought just on society and Bitcoin changing people? I would just love your thought on this for a second. Of just again, people, one of those objections that people get, and you've been in this well over 10 years, 12, 13 years you've been in Bitcoin and seeing a lot of this. And we've already had massive price gains, and I've seen people change a Bitcoin for the better. I would love your thought on just people, what you've seen and what you think will be into the future, where people are well, again, people aren't going to, they're not going to spend, they're not going to they're not going to do such and such thing because it's becoming more valuable, so they're just going to hoard it. And people, Bitcoin are hoarders, and we saw that with gold 100 years ago. They hey, these people are hoarding gold, we got to take it from them. It's like this has been something that we've dealt with in the past year. So I would love your 30 seconds, 60 seconds on your thought of just kind of how this continues playing out here.
Yeah, I think there's two things to that come to my mind. One is inflation and the money printing and spending of governments of their fiat currency and what it's doing to and how you feel it, how the average person feels it. I mean, you go to the grocery store and eggs for like $10 a dozen or more. It's insane. The cost of everything in the grocery store has gone up dramatically. And I think that that's one of those metrics that you can really use because everyone goes to the grocery store like every week or every 2 weeks, depending on the size of your family, to see like, oh, everything used to be like $150 at the grocery store and now it's 300. What happened? Like, I'm not buying anymore. I'm not buying fancy food. I'm buying the same shit, and it's doubled over the course of a year. How is that possible? Oh, there was an egg shortage. Fine, that was temporary. But eggs didn't recover in price fully. Like they're still really expensive. And milk and all dairy products and meat. Oh my God, like skirt steak. I love skirt steak. When did skirt steak become $35 a pound? Like, like things like
Insane.
that like you realize are going up and you have no control over it. You're a slave to that system because you need to eat, you need to keep buying stuff, and you're not going to drive 2 hours to the middle of nowhere to get cheaper groceries. It's just you have to, time is precious. So there's the inflation component, which is driving people towards how do you protect your family and your finances from inflation. I think Bitcoin's an answer to that. And then there's just the general like long term, I guess it still comes back to inflation, but it's just the what's going to outlive me. If I have dollars in a bank account that are getting eaten away by inflation, or I have dollars in a regular life insurance policy that pays out in dollars in the future. Well, today, a $3 million policy might sound like a lot, but if it pays out in 30 years, $3 million in 30 years probably isn't that much,
Hmm.
unfortunately. And it's only going to be it's a fixed amount. It's $3 million in 30 years or
Yes.
20 years or tomorrow. And so how do you like protect your family monetarily? How do you protect your assets from just that never ending devaluation? To me, that is one thing that just drives people from a realistic perspective of understanding that something is broken, that there's a problem, and how do you what's a remedy to the problem? And I think Bitcoin is one of those remedies. I mean, you've seen a lot of people change their. I mean, Michael Saylor discovered Bitcoin in like 2018. He's like not an OG at all.
Mm-hmm.
He just went big. Before that, I think he had a lot of quotes of him thinking Bitcoin was stupid. Or, you can look up all these quotes of him thinking Bitcoin. He just didn't get it. And when you finally get it, when you have that light bulb go off, when you realize that things on the internet go viral and digital money can go viral in this, like, educate the world on the benefits, if someone can articulate it just the right way, where you can click millions and billions of people so that they understand that this Bitcoin thing is important and it's not fleeting, then I think people will realize, like, how does this solve problems for me? And everyone has different problems, but I think, supporting a family or just being able to buy stuff, you have to eat, you need shelter, we need clothes. These things cost money. How do you get money? How do you protect your money? If you're in Argentina where there's hyperinflation, or wherever you are in the world, how do you escape that hyperinflation? I mean, there's so many stories of, like, and people in Argentina, they would buy like expensive cars just because the cars had a residual value that maintained. They would never drive it. They would just buy the cars and sell the car, because anything in the Argentinian peso during these periods of hyperinflation would get devalued so quickly that they couldn't escape the death spiral. And so Bitcoin is an answer there. And so, like, there's a lot of people come to their own realization, their own, like, aha moments. Mine was just that, like, whatever Bitcoin was in 2013 when I discovered it, I thought it was about to be introduced to Wall Street, therefore it was probably going to go up. And I started buying and doing research and got interested, and I realized, like, oh, that makes a lot of sense. Yeah, and I just went deeper and deeper and deeper, and, like, the things viral and inflation, and it changes people. It really does. It
Mm-hmm.
changes your perspective on money, on trust, on intermediaries, on and you know what? The final thing I'm going to say to this point, which I think is so important, that I think woke up a lot of people in Canada, was the trucker protest, the Canadian trucker
Mm-hmm.
protest, when when Trudeau's government freezed and seized bank accounts and credit cards, and basically anyone who was peacefully protesting
Yep.
during COVID, all the COVID mandates, and they were mainly the truckers that were blockading, trade. They they blocked them out of the banking system. A Western democracy to do that like authoritarian type of response to peaceful protests. I mean, I hope people realize that Bitcoin was the answer to that, because you couldn't get shut out of your Bitcoin, you know, custody or wherever it might be. Whereas it's very easy to shut people out of the banking system and the credit card system. That must have changed a lot of people. I hope it did. I know I wrote an article about the importance of custody after that. I was inspired to get the word out that this is not okay, that this is the world we live in. It's like these draconian measures are being taken, and it's terrible. And you don't want any censorship. And so, yeah, Bitcoin changes people from that perspective too.
Yes, I could not agree more. It just is so well said. And at the end of the day, it's government's a collection of people, a collection of humans. And I think that, again, like we said earlier, politics is downstream from culture, and the more people understand stuff like this, the more politics changes, and the more again, if you and I have been changed, and a lot of people we know have been changed by Bitcoin, it makes you think. I mean, you think different politically, like everything. It changes so much about how you think. It exposes things you didn't even know were there, because if you're caught in that political matrix, you can't even see things that are outside that purview. So because of that, if we know it changes people, we know therefore it will change politicians. It'll change people, because they're humans, and then they have families, like all these things. Like, they need life insurance, like they need these things, they need Bitcoin, they have to have these things as well, because
Yeah.
they're humans with families. So it's just kind of like the first principle thinking of A plus B equals C type of thing. So again, we get caught up at times. What do you say to people that one more of these, I'm going to kind of circle back to some of the meanwhile stuff and some of the life insurance here, but what do you say to people that Bitcoin is created by the CIA, it's created by the NSA, and it's not so much, maybe like, again, the first principle of thinking, like, again, it's decentralized. There's, the nodes, like, it doesn't matter who created it. They can't control it. So that's not really my question. My question is, they created it in order to suck liquidity out of the system and kind of mask inflation, because they knew the system was broken and stuff like that. So, like, what are your thoughts on just all of that? And when, because people get caught up in like, well, they're just trying to, suck your assets away from you. It's a way for them to, a bunch of greater fools, and they're going to suck all your assets away from you, and they're just going to leave you high and dry, or, whatever. It's to mask inflation, all these different, objections you get with like the government created, or they're going to stop it, et cetera, et cetera. So what are your thoughts on all that?
I've tried to think about who the most likely person that is Satoshi was Satoshi. I don't. Here's what I think. I think that it's not the government. I think that whoever they are is dead, because I don't think a single human on Earth ever could not spend 1 million Bitcoin at any point in its history if they were
Mhm.
alive and had access to the private keys of the 1 million Bitcoin Satoshi stash.
Yeah.
Even if you were the ultimate altruist, Buddha or whatever, like, you would spend it for good. You
Mhm.
wouldn't just let it sit there and gamble. I think they have to be dead. And whether it's Hal Finney or whoever, I don't know.
Yeah.
Doesn't matter. Honestly, it's probably for the
Yeah.
best that they're dead. As I've said earlier, 15 to 20-ish% of all Bitcoin ever mined is permanently lost. And that is a calling for make sure to protect your Bitcoin, make sure to, have the right type of custody or solution to have it outlive you, like our motto. And so I think that anyone who has private keys to a Bitcoin wallet has used or will use at some point their Bitcoin for good or bad, or to spend it on a house or a Lambo or whatever. I don't think the government is behind Bitcoin per se. You want to get into the technicals and mechanics behind the Bitcoin blockchain and the protocol, the UTXO SHA-256 algorithm and all that stuff, then we can probably find yeah, the government invented it, DARPA, or whoever invented it, and whenever it happened, the 60s or 70s. But
Mhm.
as far as 2008 white paper, which was the white paper day was a couple days ago, and the 2009, January 3rd, 2009 first block of Bitcoin with the chancellor on the brink of bailout inscribed into that first block. I mean, it tells you everything you kind of need to know about the origin story of Bitcoin. It's a reaction to the 2008 financial crisis, to the fact that you thought your money was safe in banks, and then suddenly the banks are insolvent and your money, your life savings, are gone. You're blocked out of the banking system. The bank's not open to give you cash or wire you money. It's not open to make payments. That's messed up. And Bitcoin custody is a way out of that. And, that changed people. It changed whoever Satoshi was, or a group of people were, into creating this asset. The reason white paper was written in 2008, I mean, listen, the financial crisis really started in 2007. The white paper was written in 2008, clearly as a reaction to what was happening with Bear Stearns and Lehman and everything else. And this sort of value asset that lives outside of the banking system is so important for everyone in the world, whether you wake up to the fact that it's, you know, insolvencies and recessions and crashes and all these types of bankruptcies are going to happen in your country, whether they have or haven't happened yet. They will. We live in these cycles. There's this thing called the fourth turning, which I think is a fascinating, macroeconomic outlook on the human cycles that happen every 20 years. And probably the 2008 financial crisis was like the turning point for the latest cycle that we're in, which ends in a couple of years in 2028. And, a fascinating book. I recommend it to everyone. But, you know, there's this a human built Bitcoin, or a group of humans built Bitcoin. And so there's human psychology behind all of it. And we can get into the philosophy side of all of this, which I think is fascinating. But ultimately, you know, we have these greed and bust cycles within humanity. And I think that's what leads to market, bull markets and bear markets and crashes. There's a lot of emotion in Bitcoin, and emotion leads to greed, bull cycles, and bearish crashes as well in Bitcoin. I think that a lot of this comes down to humanity, and humans built this, and we can't get out of our own way. I don't want to get too much more philosophical though, because we're going to get into a wild tangent that is probably not
we
advised.
can, we can do it again. We can go down some philosophical rabbit holes in the next episode in a couple months. We'll use that one to go a little bit more philosophical and really hit down the rabbit hole a little bit. What what do you think? Because that stuff's fascinating to me, and I know a lot of people that watch the show, and just in general, a lot of people on YouTube, like, they love the philosophical side. So there's a time and space for that. Absolutely, I can't wait to do that. From someone like you, because a lot of the people, it's funny. Nolan Bowerly, when we were at the Canadian Bitcoin conference, you and I, we were talking, doing some stuff. But Nolan, I was sitting at the table that one night when we were at Gibby's, and he was joking because he was like, men, he's like, I don't know what it is with men and women. Men, they just love philosophizing about Bitcoin, whether you're, an OG, from 10, 12, 15 years ago, or like the guy that just got it yesterday. You just want to wax poetic. You're like, anyone who listens, you'll be on the stage, you could talk for hours. It's like, women, when they get it, they're like, cool, that solves all our problems. Okay, next thing. Like, there's no, like, they don't want to philosophize about it. And like, they won't talk for hours. Like, cool, like, I got it. I don't need anything else. Like, good, let's move next thing.
Well, it's
It's
because
so,
women are smarter than men.
yeah, exactly. That was like his whole thing. We were on stage, one of the talks we were giving, like, and he actually brought that up as well on the stage. So it was just funny. And like, the women are laughing and men are laughing. But it's like a Bitcoin bro philosophers, and like, women are like, yeah, got it, guys. We're good.
We're like, whoa, that's amazing. What is? And women are like, okay, I get it. That's amazing. Yes,
That's
next.
awesome. Yeah. Next. So good. So I want to come back because I didn't ask you this question earlier, and you just touched on something here like a minute or two ago. And I wanted to ask you this, at the beginning. What you mentioned, the banks, right? Credit Suisse and all this stuff. They, from an early point, it seems like they understood Bitcoin. A lot of people are like, well, they don't get it. The elites don't get it. And what, like, it seems like they get it. They've got it for a long time. And it sounds like that, they know it's Bitcoin itself, just the protocol is a bank killer. It really kind of renders what they're doing moot, obsolete, whatever. I mean, however you want to kind of look at it. Is that the case? I mean, is it, from what you've experienced in your life and all the experiences you've had, how do they see it? So I would
Yeah,
love your thought
no,
on that.
not anytime soon. For now, they can just sell liquidity and charge
Yep.
transaction fees and charge custody fees and make money just like they can and will do with anything that they could make money on. The financial system is absolutely necessary in a capitalist society like ours. And the question is, what purpose will the banks serve within the Bitcoin economy? And the
Right.
answer is liquidity and custody, leverage, yield, the ability to borrow. JP Morgan, like, of all banks in the world, JP Morgan, I mean, Jamie Dimon's bank, where he has been quoted so many times saying, it's not my fault if you're an idiot and want to buy Bitcoin. Like,
Yeah.
only
Yeah.
idiots buy Bitcoin. Like, he says that shit.
Uh-huh.
And yet, not even a week or so ago,
Mm-hmm.
JP Morgan makes headlines saying that we will accept Bitcoin as collateral for loans. Like, I think by the end of this year,
It's insane.
they are going to allow you to pledge Bitcoin to get loans, whether it's a HELOC or a mortgage, or whether it's a hedge fund just borrowing. I don't know yet. It's probably institutional, not retail yet. But if they're going to do it for hedge funds, for example, who are just going to pledge Bitcoin and get fiat or some other asset as a loan, because they're an institutional client in the private bank, ultimately, why don't they just accept Bitcoin for a mortgage or a
Yeah.
home equity line of credit or anything else, and open up the credit facilities that exist in every other capital market and just solidify the fact that Bitcoin is going to be part of the capital markets. And so the banks will make money that way. It's an important piece of the society that we live in. I mean, banks are absolutely ingrained in the fabric of the Western world. And so, and there's no two ways about it. Too big to
Mm-hmm.
fail, it doesn't matter. You have to just live within that society. And it's part of the capitalist society that, you know, and the meritocracy that we believe should exist and does exist, where you work hard and you're good at what you do, you should get paid more. And you need banks for that. You need leverage, you need credit, you need the ability to borrow against your assets, you need to be able to pledge your Bitcoin as collateral for any type of loan, whether it's a house or whatever, as opposed to them seeing Bitcoin and saying, "Oh, that's a red flag. I'm not going to borrow. A, that's not collateral. B, I'm not going to lend to you at all because you own Bitcoin." That's what it used to be like, not even a couple years ago. And now it's flipping the script. So banks are embracing. They have no choice, and they will do what they can to embrace it for as long as possible. And ultimately, banks and central banks, I think, are going to be owning Bitcoin the way that they own
Mm-hmm.
gold and other assets to support their treasuries.
Yeah, and going back to, again, you just mentioned Hal Finney a few minutes ago. I mean, I believe it was Hal in the Bitcoin Talk forums that mentioned Bitcoin banks. Like there will most likely be a Bitcoin bank someday, if I'm not mistaken. So, this is something from the beginning that's been hypothesized about, etc. So, anyway, not to go down. We can next time we can go a little bit more down some of those roads, but I want to bring up Dave Ramsey. I want to bring up, there's, why hasn't life insurance caught on more? Maybe it's because we haven't had this, what you guys are doing. Meanwhile, maybe that's why it hasn't caught on more in the sense of like whole life insurance, the infinite banking concept, stuff like that. You have people like Dave Ramsey for a long time and this is why it's kind of coming full circle with a lot of this, where the banking system's here. Obviously Dave Ramsey's a big, like, you can't have debt, and which is on a hard money standard. Okay, that makes sense, but we're in a fiat debt based standard. So not having debt, that's antithetical to how the system is currently. But it's, don't have debt, don't have credit cards, and don't have insurance, or he has, have term insurance, but don't do whole life, don't do
That's how
infinite
poor
banking.
people stay poor.
Yeah, I would love your thoughts on just kind of all this and why this isn't bigger. And again, guys like Dave for years just pounding the pavement against that, or what?
He's an idiot. I'm sorry. First off, debt is tax free. I think the way to really live is I believe in a meritocracy where you work hard,
Mm-hmm.
you're smart, you're good at what you do, you should get paid the most. But then Uncle Sam wants his fair share. And what do you get in return for paying taxes besides, police and protection and certain things like that, which are absolutely imperative and worth it? Well, there's a number. Like you shouldn't be paying 50% in taxes if you live in New York, if education's not free, if healthcare's not free, and all this other shit's not free. Taxes should be lower. You gotta be efficient with the amount that you pay in taxes. So debt is tax free. You can have debt if you manage it correctly. You're not over leveraged because everything you borrow has no taxes. So if you could borrow against your Bitcoin, great. You don't have to pay a dime in taxes on your Bitcoin. I think that you have to just be responsible with your credit card and with credit, and leverage and margin that's extended to you. It used to be, part of what led to the 2008 financial crisis was banks were giving out way too much credit to non-credit worthy people. Like the subprime loans, for example, like doormen in buildings would have like summer homes in Florida on the beach. It's like, where did you get the money
Mm-hmm.
for that? Oh, the bank gave you a 1% down payment loan with 3% interest rate a year that had a teaser rate that quadrupled after a decade, and that's what led to subprime. But you have to be responsible with debt, with leverage, with credit. That's what you should be teaching, not don't get debt. I mean, it's like he's talking to idiots. He's talking to non-college educated, non-sophisticated people. I think that is fine for that group of people. If you don't think that they can get out of their own way, then yeah, don't have debt. Don't you just live off a debit card, not a credit card, and whatever. I see people in front of me at the grocery store often, like swiping a debit card, and I always ask myself. I never asked them, but I asked
Yeah.
myself, like, why are you using a debit card? Like, why aren't you using a credit card where you get points, where you get where you get credit, where you can defer your payments? I pay my credit cards in full every month, obviously, but I get points. I can manage my cash flows on a monthly basis because of it. And so I just, yeah, Ramsey doesn't speak to me or you, I don't think. I think he
Yeah.
speaks to, people that aren't sophisticated.
Yeah. And unfortunately, and you're right, because I believe in a meritocracy and in accountability and responsibility. And in a fiat system, there is very little of that, right? It doesn't incentivize people to be responsible, or for mom and dad or school or any of these different entities to teach people financial responsibility. So we are in this world where, like you said, I mean, Dave Ramsey has built, this massive business off of people that haven't been taught basic responsibility and accountability for a long time. I mean, decades, because of this debt-based system we live in, where it's just, yeah, we need you to get into massive debt and just, whatever it is, so it's for the person that generally majority of society that just hasn't learned that, unfortunately, because it's not incentivized. So anyway, fascinating stuff. But do you think that, do you guys have, meanwhile, like, how do people track stuff, like, their life insurance? Like, is there a website back end? Like, how do people easily track these things and just different the flows of what's going on?
So because everything's in Bitcoin, you're going to ultimately, to pay your premium, send in Bitcoin from whatever wallet or vault it's in currently into a segregated vault at Anchorage that only your Bitcoin will be in. Because of that, you can track your Bitcoin payment on the blockchain. And you can track that specific Bitcoin that goes in, that UTXO that goes into that vault for the life of it. You could see where the Bitcoin's going to the miner and the fully collateralized counterparty risk-free loan and back. And as it moves, it's always going to be at Anchorage. Because remember, while the Bitcoin might go to a miner's going to send us even more Bitcoin back, that stays at
Mm-hmm.
Anchorage. So Bitcoin is fungible. One Bitcoin equals one Bitcoin. Doesn't matter what serial number is associated with each Bitcoin, as long as it wasn't in North Korea or something like that, no fact sanctioned state. But as long as it's KYC, AML compliant, it doesn't matter where your Bitcoin goes, but you can always track it. And you'll always be able to know that there will be at least that Bitcoin, but more, usually more, always more at Anchorage. And we're not a MPC. It's not self-custody. So you don't have access to your private keys because your Bitcoin is at Anchorage and it's held by Meanwhile, but you get the assurity that Anchorage is like the best custodian and you can track your Bitcoin on the blockchain. And we're audited every year. And so like mechanically, you'll always be able to see flows.
This is a fascinating it's like the plight of the Bitcoiner. And I feel like most companies, almost every company, Bitcoin company, a true Bitcoin company, Bitcoin only company, deals with this. And I helped Aladdin, one of my good buddies, with Bitcoin trading cards for a number of years. And, we'd get offers all the time from, meme coins, crypto this, JPEG that, all the kinds of stuff to try to put, make JPEGs of the art. And it's just a Bitcoin. It's a based trading card company talking about, a lot of things that the average society won't talk about, obviously, and waking people up from their stupor. And so, but you're always dealing with this. And I guess where I'm going with this is, like, every company has their own little way of having to deal with it. But I know, again, a lot of Bitcoiners would say, well, hey, I like the OFAC stuff you were just saying, like, North Korea, like, well, I don't give a shit that North Korea might have used my Bitcoin. And you're right. It is fungible. So like that should not be, that shouldn't matter at all. So,
It doesn't to us, but it does to the
yeah, thank you.
regulators.
That's where I was going. Like, yeah, like how do we keep squaring the circle? Maybe this is more a
Well,
broader term. This isn't like a meanwhile thing necessarily, but like
let me make sure
yeah,
I'm clear that we care what the regulators think, of course. Like, I'm not
right.
saying that we don't care what the regulators think. I'm just saying that I fully agree that like one Bitcoin's one Bitcoin. And
Yeah.
whether it might have been somewhere at some point, I mean, it's that old story of track dollar bills and like $100 bills, like a bunch of them have some huge percentage of them have traces of cocaine on every single one. And like I don't know what to say to that, but a
Yeah.
dollar bill is a dollar bill. And
Yep.
end of the day, whether some asshole had it or not, you have it now. And
Yes.
you got it from a bank and or you got it from a store as change for goods and services that,
Yes. Yep.
and the fungibility is important.
Yes. Yep. It's just and it's like, again, maybe it's just time, and I guess maybe that's an overarching question of like, do you think it is just time that, again, defangs some of these really powerful entities over time, whether it's the Bank Secrecy Act and like all these things that we've just kind of like layered on over time, where like you're in this like fiat trap where, yes, like if you have a company, and again, it's tough because the average person wants to pontificate and they don't have a company. So like, okay, well then you go start a company and be completely outside the system and then battle the government right now, right? Again, this is like the plight of the Bitcoiner, where we have to have something where you're marrying these two worlds together and you're hoping that you can kind of string things along enough, and Bitcoiners will get wealthier over time, which by proxy, or not by proxy, but directly, then a lot of these Bitcoiners will probably start going to other big organizations, or they'll go into government and they'll start hopefully reducing the power or just the size of some of these entities and the grip they have over society. So these aren't issues in the long run. So anyway, it's like this, it's just this yin and yang, this battle that we're constantly having to deal with right now, living in two worlds, like we mentioned earlier. So I appreciate you clarifying that, because I think it is an important thing we have to live in two worlds. You can't just like not exist and like, oh, we're going to the North Pole an engine not do anything, or just like build up there quietly and then like thrust everything we're doing 10 years from now onto society, be like, hey, we're here, adopt our stuff, like use all of our things, we have the better money. People are like, who are these clowns? So anyway.
I love that Bitcoin is being built for durability, for worst case scenarios. The fact that there's miners on satellites in space,
Right.
the fact that
Yep.
Starlink allows you to be connected via satellites in space, that shit can
Yep.
hit the fan on planet Earth and Bitcoin can continue to be mined and transacted via satellites is pretty wild.
And again, it's all the more reason to build your company on a Bitcoin standard. Like we've talked about what you guys are doing, things are denominated in Bitcoin, because then you can't, I mean, really at the end of the day, if push comes to shove and an asteroid hits the earth, you can still operate. You can still do what you need to do. And I think that's a really important, that's the signal in all this. There's a lesson in there for everybody of operating on a
Remember
Bitcoin
the
standard.
final scene? Remember the final scene of Fight Club
Yeah. Oh
where
yeah.
they blow up all
So
the
classic.
credit card companies to
That comes
reset
back to
the
Fight Club.
global financial system? I know.
Everything.
Um,
Yep.
I mean, that was like the old world pre like the internet as we know it
It was,
today.
I know, right
But
before. Yep.
like the concept was blow them all up and reset
Yep.
everything. Well, you can't do that with Bitcoin. You could blow up any bank, anything. Bitcoin will still continue to mine every block,
Yep.
block after block, tick, tick, tick.
So true. Okay, so what are your, we've kind of danced around this a little bit over time here, but what is your balance between like what your, maybe it could be your stance or maybe meanwhile, or what you guys kind of think about when people come to meanwhile to get a policy or whatever, but how do you think about, we talked about some of the risk mitigation buckets and just different things of that nature, but like the term life insurance versus again like the whole life, like infinite banking, things like that. Like again, you and I briefly talked about, a little, maybe it was at the conference of, terms great for the short term, obviously, but like Bitcoin obviously outruns all this, all the fiat, legacy, whole life, infinite banking stuff in the legacy life insurance world. Bitcoin completely outruns that. So I'd love just, again, a kind of quick synopsis on how you view like the short term, a term policy versus some of that stuff. And maybe, and how, meanwhile, like how do you, how are you operating in that
Yeah.
world? Like what kind of policies can people, I guess, get actually in that sense?
Yep. So I have term life in dollars. And the reason is because it's cheap.
Mm-hmm.
It protects my family. It's pretty simple. There's no tax benefits. It's literally I pay dollars, $100 a month
Yep.
for 10 years. It pays 3 million if I die in
Yep.
the 10-year. It's basically protect yourself during your peak earning years. In case something happens to you, you protect your family and they get some money, a lump sum. They get the full 3 million tax free, but there's no, growth or anything or policy loans. Whole life has the policy loan, the investment account, the yield. It makes no sense to have a Bitcoin term thing, at least not yet, because the point of our product is to have all the tax advantages on your Bitcoin, to basically have a tax wrapper for your Bitcoin. And that comes in the form of whole life. And our product, you pay over 10 years and then you're done for life. So you're not going to pay your whole life. Everything is guaranteed and fixed. The fact that you get the tax advantages is exactly what Nelson Nash's infinite banking concept is all about, is fund whole life policies, borrow as much as you can from them without ever lapsing your policy, and use that money that you're borrowing, which you never have to repay, to live your life. And if you do it the right way, and by the way, at Gibby's in Montreal after the conference, I was sitting next to a gentleman as well. I forgot his name, but he was a Nelson Nash like disciple.
Oh,
He
right.
had this like big burly guy lives in Niagara on the Canadian side of
Oh, wow.
Niagara, and he has like 12 whole life policies. He's like a
Wow.
wife and like 2 or 3 or 4 kids, and he has 12 or something whole life policies. And each month he can borrow, let's say 20,000, and his net expenses are 17,000. So he's making 3,000 a month just in life insurance on top of whatever his salary is. And that 3,000 bucks he's making each month, he gets another each year he gets another policy. And
Mm.
maybe he spends 2,000 a year and keeps 1,000. And that's a new policy. And then over time he borrows from that policy, and then suddenly his profit margin goes from 3,000 to 4,000 to 5,000. But I keep saying to him, I'm like, so your future cash flows, they're in dollars, CAD dollars,
Yeah.
and they're predictable, but the inflation rate is unknown,
Yep.
and there's just persistent inflation. So the cost of life has gone up. He's like, yeah, no, it's true. Over the last decade since I've been doing this, $3,000, whatever, doesn't buy what it used to buy, and it won't in a decade from now.
Right.
And yet that is my margin. The way that whole life infinite banking works is like you have this fixed margin essentially, and it buys less and less and less, and that comes back to the inflation and purchasing power problem. And to do you so basically, the concept of infinite banking is sound. It's interesting. It works, but the flaw is the money used,
Mm-hmm.
the fiat. And if you use Bitcoin to do infinite banking, then suddenly everything gets cheaper and cheaper and cheaper, and your Bitcoin buys more and more and more. And that to me is like the panacea. That's how you
Yeah.
really do infinite banking.
Yeah. It's almost like it doesn't work or hasn't worked until now. I mean, again, I'm a believer of we haven't had actual money until Bitcoin was discovered, basically, right? Like it's a bunch of technologies put together. That was the discovery of Bitcoin in essence. And that it fixed all these things. Like again, the life insurance problem, like this long-term problem was it inevitable to just kind of inflate away because you're using the bedrock is not there. It's just sand. So you're using the wrong money, like you said, or the currency, not even a money. It's just a currency, the dollars. So that's really wild. I think again, that's the signal within all the noise as well. That's truly mind blowing. What was his? I guess
Yeah.
really quick. What was his? Like when you're explaining just even the Bitcoin part to him. I mean, he was there, so I'm guessing he was a Bitcoiner though. Like how was he squaring that circle? What were his thoughts on everything?
He loves it. It's new to him. He's never heard of it before.
Oh, okay, yeah,
He needs to get more Bitcoin.
yeah,
And I'm like, listen, you're making $3,000 instead of buying $1 whole
right,
life policy. Start buying
yeah.
Bitcoin. And he's like, yeah, that makes sense. And I'm like, my man.
Oh man. What all right, really quick. I want you to explain again just to the average person that doesn't know, say they've never really maybe they're a Bitcoiner, they never looked into the life insurance stuff, like especially the whole life, the longer term stuff, they get term. But how is what makes or like what's the advantage of the life insurance, the long term, like the tax advantage, like why, like how is it tax advantage, like how is it tax free, like just the borrowing. So I'd love for you to just kind of give a quick synopsis on that and that true advantage for someone that really hasn't looked down the insurance rabbit hole a ton.
Yeah. So everything in whole life is tax free because the government and the IRS agreed that whole life insurance in the US and Canada and most of the Western world, the assets grow tax free, the policy loans are tax free, and the payout, the claim when someone dies is tax free. And so whether it's dollars or Bitcoin or anything else, and there's this thing called PPLI, private placement life insurance, where you could put cars, houses, Bitcoin, whatever you want in it, except the problem is it's indexed to the dollar, PPLI. So with the Bitcoin at least, there is some sort of dollarization, which could be a taxable event. With our product, everything is just plain vanilla whole life. We keep that tax-free nature. There's something called a modified endowment contract, which the IRS created in the 70s, the 1970s. And what that is you have to pay your premiums over at least 7 years in order to get all the tax benefits. We did 10 years to be safe. But what used to happen in the 70s was you get all these rich people to get a life insurance policy like PPLI, and they'd put like a yacht, houses, like all these assets in it to fund it. And then they'd be able to borrow dollars tax free from it on day one.
Mm,
So they'd buy these assets over time, put them in a life insurance policy, and then be able to borrow tax free against them on day one. And the IRS quickly realized, like, holy shit, this is a massive loophole that is being exploited by the rich, and that we need to figure out how to fix this. And so they plugged that hole in the form of what's called a modified endowment contract, which means that, okay, you can't pre-fund everything up front. You have to pay your premiums over at least 7 years, and you can borrow a certain amount each year up to a percentage of the surrender value, and that'll make it tax-free. And so our policy is a non-modified endowment contract, or non-MEC for short, which just means that you're paying your premiums over 10 years, which means that everything has no taxable event, is tax-free, that You pay your premiums in Bitcoin by just transferring your Bitcoin into the vault address that we generate for you. Wherever your Bitcoin is in the world, we screen your Bitcoin after it's sent in. That's due to the UTXO nature of the Bitcoin protocol, where you don't know your sending address until after you send it. So you send in your Bitcoin payment, we then screen it, make sure that it's not coming from North Korea or any of those. And if it is, then we have a lot of questions for you. But then, your policy is funded for that year. And every year for a decade on your policy anniversary, you send in your next payment, regardless of the price of Bitcoin. You're going to pay, for that 10 Bitcoin premium, you're going to pay 1 Bitcoin a year for 10 years. Doesn't matter if the price of Bitcoin doubles, triples, quadruples, or halves at any point during that decade, because 1 Bitcoin equals 1 Bitcoin. And your payout of 18 is 18 on day 1, year 10, year 50. It's always 18. So whether the price of Bitcoin is $10 million or drops to $1,000, your payout's 18 Bitcoin. That's the bet that you're taking. But the truth is that you own the Bitcoin already, and you're already long Bitcoin. This just allows you to be long Bitcoin in a tax advantaged way, where you get yield, where you get to monetize it tax free, and your Bitcoin will outlive you. Your spouse doesn't need to know how to use a wallet if you die. They just need to say, meanwhile, hey, I'm a beneficiary of a policy. The person died. What do I get? Well, you get Bitcoin or dollars, and we'll help you either way.
That's incredible. What do you guys do for? Do you think there'll ever be any type of like multi-sig, or like, I know, like, Fedimint, some of the layers are being built on. Can you see, or you think anything's on the horizon where there will be something like that? Because again, I know this was alluding to earlier, and I forgot to mention this, so I'm glad I just saw this, a different aspect where it's coming back around to this world we live in as Bitcoiners, where you have to live in both worlds, a fiat world and this future hyper Bitcoinization world. But you do have a lot of Bitcoiners that, it's like, hey, we're adamant, I'm not doing anything but Bitcoin self custody, which is great. That's, the prerogative of some people or whatever. But you're always trying to, find that balance of people, where a lot of, because one of the questions I'm going to ask you is like, how have people, like you said, to your CEO of like, how is this not blown up yet? Like, how do you not have 50,000 people yet? And in the normie world, it would, if it was, it's this enticing, it would blow up immediately. But they don't understand Bitcoin. But in the Bitcoin world, it should blow up immediately. But then they're like, well, I don't, you're custodying it, I'm not custodying it. It's like you're like stuck in between,
Yeah,
of like trying to bridge this gap somehow. So
it's a combination of a couple things, but that's a valid point. So why don't we have everyone as customers yet? Because one, most people haven't heard of Meanwhile or
mhm,
Bitcoin life insurance yet. We're trying to get the word out.
yep,
We're doing podcasts. We're speaking at conferences. We're writing articles, thought leadership, raising money, getting headlines in Bloomberg for our fund round, backed by like Apollo and Bain and Northwestern Mutual, like some of the biggest investors you can have as a life insurance company or just any company. So we're making news and waves and trying to get the word out about A, who's Meanwhile, what's our origin story, why do we exist, what problems do we solve? B, what is Bitcoin denominated life insurance and how does it work? And what problems does it solve? So the getting the word out is slow. It's hand-to-hand combat. It's,
yep,
one group of Bitcoiners at a time through different pockets of, the community. All the Bitcoiners aren't together in like one conference hall where we
yep.
can like speak on a loudspeaker, like, hey, let me get 15 minutes of your time for yield and tax-free policy loans and, and seamless inheritance tax-free for your Bitcoin for the long term, so it outlives you. Like that'd be great, because I truly think a massive percentage of every Bitcoiner on the planet would want our product. The other thing is that we only operate in Canada and US right now. We're going to be launching in Hong Kong and Singapore soon, which we're excited about. Our only product right now is a 10 pay, what I was mentioning
Hmm.
before. In Hong Kong and Singapore, it's going to take it's a different product. It's a single pay. And that's because the tax regime is a little bit different. They don't have the modified endowment contract or the
Mm,
need for a non-MEC over there in East Asia. So you pay your premiums up front once, and you get a bigger ability to borrow against your life insurance policy because you're only paying in once on day one, and we custody everything on day one. So there's a lot of benefits there. And Hong Kong is a big life insurance and Bitcoin community as well. Same with Singapore. A lot of like the mainstream, like mainland China, huge whales, Bitcoin whales have moved to Singapore and Hong Kong. So it's a great market to go into as, as step two after we raised all this money. But yeah, we're just trying to get the word out. Most people haven't heard of Meanwhile. And that's why we're here today.
It's incredible stuff. Is there anything that you think we need to cover, just in terms of Meanwhile, insurance, just everything that we have not covered?
I think that end of the day, I want your audience to recognize that this is the most logical next step for the evolution of the Bitcoin economy, for life insurance to enter the fray, for your Bitcoin to be protected in the form of life insurance from taxes and from your death. So that way you can leave Bitcoin to your family. We have a lot of single guys, that young 20s that have policies. They plan on just borrowing max as much as they can to spend as much dollars as they can to buy whatever they want with their Bitcoin wealth. Maybe they'll have a family one day. Their beneficiaries now are like mom and dad or like brother and sister. Maybe it'll be a spouse or children in the future. Who knows? But you can, there's three parties to every contract. There's the owner, the insured, and the beneficiary. The owner of a Meanwhile policy can either be an individual, an entity, or a trust. The owner is responsible for paying the premiums in Bitcoin and has access to the tax-free policy loans. Then you have the insured. The insured is a single human life between 18 and 65. Currently, that human life has to be residing in or have a green card of the US or Canada, soon Hong Kong and Singapore. And finally is the beneficiary. The beneficiary can be a person, a group of people, like all your kids in equal splits, or you can have your favorite kid get 80%, your other kids get the remaining 20. Any number of people. It could be a trust, which is a trust fund or irrevocable or revocable trust. It could be a charity, totally up to you. And those are the three main parties to every policy, the way that we've built this product. It's a pretty straightforward, like we try to make our product as simple as possible. We have this like superstar from New York Life, who's like a 25-year veteran, climbed the whole entire ladder at that traditional life insurance company, rose to the top and realized that it wasn't for him, and found Zach, our CEO, and launched this product with him in 2022. We built this insurance product, and it was like a dream for him because he built this product knowing all the crazy complications of life insurance and how convoluted it was and how many riders there were and all this shit that made it so complicated and hard to understand. And he extrapolated away all of the complexity, and he made the simplest, most straightforward product he possibly could in the form of a Bitcoin 10 pay, our product. So it's pretty easy to wrap your head around. I have a deck. It's a few pages that I send to anyone who's interested in learning more. But our website has a ton of information as well, and you'll be shocked at how quickly people understand everything about our company and product in a relatively short time. Whereas if you get whole life, traditional whole life, dude, you're going to buy it and you're still not going to understand it, but you're just going to buy it because you're convinced. You're either sold by the salesman or you're convinced by like a parent that you need it, and you don't understand how it works. You just know that like I'm going to pay this amount, and if I die it goes to my family, and in whole life I also have this policy loan like mutual fund piece of it, the investment portfolio. Our product, anyone can understand. It's really simple, which is great. I'm a crypto guy, but now I understand a lot about insurance, life insurance, because the product's not that complicated. So that is like all the, commendation and accolades go to my founders and Jim Cristallo, our chief insurance officer. He's the New York Life vet that I'm talking about. He's the man. And I think that helps too for people to hear our story. It's usually like I have a 15 to 30 minute call with people, tell them all about our company, our product. At the end, they're like, no brainer. Sign me up. Where do I? And it's all online. You don't have to visit a doctor for a physical. You don't have to submit blood or urine samples. Everything's online. You apply online. It's a 30-minute application. Fill out your health history and stuff like that, and we underwrite you. As we go international, There's probably like in other countries outside of the US, you're going to need to, visit a doctor, but that's because it's harder to ascertain accurate medical information outside of the US than it
Mhm.
is inside the US. So, but people see the upside of our product, and if they're willing to, get a physical, then you sign up, and it'll be pretty straightforward.
It's incredible. It really is. I mean, I think I've told you this. It's why I've fought whole life insurance for a long time, really, just because it was denominated in fiat. It just did not make sense long term to be in it. So as a Bitcoiner, so yeah, you're solving these problems that they've been around for a long time, and it's a massive market you're bringing to Bitcoin. So it's incredible to see where you guys will go, and excited to have you guys as sponsors of the show. So it's very, very cool because it fits with my ethos and in the world I come from, which is, again, a lot of this having, my buddies in this industry, and then me being in real estate and just all this stuff for a long time. So it's right up my alley. So how many
Awesome,
hours,
man.
how many hours do you think, my last thing is just, I want to get your thoughts on price. We talked about this, dip. It's just up and down in price right now. Again, you've been in since 2013. How many hours do you think you put in studying Bitcoin? Because I think this is always something that people are
Oh
very
man.
curious about. And it's always a point of contention with people, but maybe the number of hours you've studied Bitcoin, or at least in and around the Bitcoin space, obviously. And I say that also as context for the credibility that you have, not just, hey, I just randomly bought it in 2013 or something like that, which I know some people did, but obviously you're a guy that has a lot of knowledge of what's going on. So the credibility of being in for a long time, the hours you put in, and also just some thoughts as we close here as to kind of where we're at in this space.
What do I think about? This is a good problem. It's like, how many gas stations are in the US? How many hours did I study crypto? So over 12 years, since October 2013, um, easily, easily 15 hours a day, in the sense that every waking hour I have on the widget of my background of my phone, like the price of Bitcoin and other crypto assets and markets. I can't help but look at it. The price moves. I look at Twitter or, websites, and to see what's causing the movement. Wallets, endless amount of wallets, self-custody, third-party custody, hardware, web wallets, exchange accounts, domestic, international. Been involved in so many different businesses and investments in the crypto space. I mean, dude, easily way over 10,000 hours.
I was going to say,
25,000 hours, if I had to guess, maybe
yeah.
30,000 hours. I think I'm like, there were periods of time where like my family would be like, stop looking at the price of Bitcoin every time you look at your phone. It's not healthy when it's down. Um, and I'd try, and I'd be like, okay, I'll delete this widget or whatever, and like reinstalled it the next day. So who are these people telling me what to like? No,
Oh
like
man.
I'm interested. Yeah, 25,000 hours easily. I don't know, something like that.
Well,
Crazy amount.
I was going to say, Jason, I was doing the math of like 15 hours a day times 300, just even 300 days a year, 15 hours times 12 years. That's like 53,000 or 54,000 hours.
There's
So
no 365 days a year. There's no weekends in crypto. There's no holidays in crypto.
I was trying to be
Dude,
conservative. So 15 times
you know when
12,
some of the
65.
craziest markets were? Thanksgiving. Like Thursday,
Yeah.
Thanksgiving, like the crypto markets for historically for whatever reason are very volatile.
Yes.
Like there's just no weekends or holidays in crypto, and
So true.
constantly looking. The other thing that's cool about Bitcoin because of that is the fact that like weekends you could see like geopolitical events happen, and you could see the
Hmm.
price of Bitcoin as a predictor for how equities and the stock market will open on Monday. Um, when the assassination attempt on Trump last year, July
Yeah.
last year, happened, that was a Saturday, I think, and you saw what happened to the price of Bitcoin, which was captured a lot of emotion because it was pretty much the only market that was open at the time
Hmm.
globally. And then like these decentralized prediction markets like Polymarket
Yeah.
built on crypto, and how they very accurately predict events, future price events or election outcomes, etc., on weekends when polls are closed or whatever. when other markets are closed. And so the power of 24/7 blockchain and crypto is so important that, it really is like it's 365 days a year, man. Right? There's no days off.
Just short of 66,000 hours then. So 65,700 hours. So over the last 12 years. Crazy. Incredible stuff. Where can people find you, Jason?
Shoot me an email, jason@meanwhile.bm. The BM is for Bermuda, since we're a Bermuda-based company. That's where our headquarters are. Go to our website, meanwhile.bm. Or on Telegram at Leibowitz, Lebobtc, any of the above. You can find me or my company, and happy to talk to anyone about our product, our company, anything really crypto involved. And then in our show notes, I know that you're including a link to our website and our sign up form, where there's a unique referral code for any of your listeners to sign up for a new policy.
Yes, sir. Amazing stuff, Jason. Thank you so much for joining me here today. Just an incredible introduction to a lot of people, to probably dang near everyone, of what the insurance industry is going to look like going forward, life insurance, and what you guys are doing with Meanwhile. And look forward to having you back on. We'll do a little more philosophical stuff maybe in a few months here, but nice. Incredible, mind blowing what you guys are doing. And again, I've been waiting for this kind of stuff personally for years. I mean, years and years and years. So
I know,
really incredible.
The real ones, they've been waiting for life insurance to come into crypto.
It's unbelievable stuff. So thank you for what you guys are doing, and thank you for joining us here today and sharing everything.
My pleasure, man. Thank you for having me.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.